both markets, both bullish and bearish. Now, I'm going to show you guys some results. So if I go into my Edgewonk account right now, my trade journal, you can see I've got a little bit over 340,000 in capital. And over the past week, guys, I've had a 70% win rate. So I've won 7 out of 10 of those trades. And this is all in this
7 out of 10
right now. So if you're someone out there who's holding at the moment and you're sick of it and you want to learn how to trade, guys, I've uploaded a fully free training where I'm going to show you a step-by-step rule-based system. Okay, that is sick of it. And you want to
Next.
learn how to trade, guys. I've uploaded.
Morning all. How are we doing? Sorry, I was hoping I was going to get Greg Secker this morning, but we didn't. Never mind. Anyway, he's got a 7 out of 10 strike rate. He's had a really lucky streak and he's selling you a course about it. Go check him out. How are you all doing? Morning, Mohammed. Morning, Stevie. Morning, Ladder. Morning, Themba. Oh, Mohammed, you've been typing a lot this morning. Proud to be first in line. Yesterday's video got downloaded from my personal library. I cannot afford to lose such informative speech. Glad you're getting something out of it. Follow-up question. Here we go. Talked about banking profits while stuck in drawdown. How exactly does this happen? I suppose that used margin is locked in and I can't do anything about it. Morning, Mace. Not quite sure I understand that question. I'm going to go through a little bit of drawdown control actually this morning. Yesterday was a bit of a wild ride, wasn't it? Let's just quickly cover news first because this won't take long. There is no news. It's Wednesday. There's no news. There you go. No news. All done. Waiting for tomorrow's CPI. So there's nothing to worry about from a manipulation perspective today. There wasn't much overnight that I could see. Obviously, the midterms are going on and the Republicans seem to be gaining an edge over the Democrats, which is not good. Well, I don't know. I'm not in America. I don't really care. But from a world perspective, I don't know. Anyway, but I'm not quite sure what impact that's going to have on the US dollar. It's probably going to be a few days before we get the results. But the person running the country losing control of being able to pass laws, I can't see being a good thing. But financially, don't know. Anyway, we'll find out. But other than that, there's not a lot of news overnight. So nothing to look at overnight. Nothing today to worry about. So business as usual, basically, today. Banks yesterday, 1.68%. Most of that was DAX. So as you know, I've got a position running on the DAX, which I've been getting into since down here. Looking for this gap fill, basically. Just been scaling into a position. I scaled into some more on this yesterday. I got more positions on it. As we pushed up, I got into 1% positions up here because we were so extended. And the reason I got into these positions wasn't really because of the DAX extension. It was more because of the US dollar extension. The US dollar was very, very, very stretched very fast. And it really looked like a pingback was coming on the US dollar, which happened. And I just basically got out of all of it on this move down. So I made a good 4 or 5%, 6%, I think it was, something like that on this move down here. So I used that profit to scale out of partials on these. So I took half of that off, about a third of that off. And I took one of those off as we got down to here, and I took another one off that I had there. So I scaled out basically of a little bit of my DAX. And I used some of that profit as well to get out of some of these other positions. So when you were talking, Mohammed, about banking profits while stuck in drawdown, you just trade normally. So I was scaling into this. I decided to get aggressive on it, which was more of a scalp move with stops, and got out. So I banked that profit and I used that profit to reduce other positions down. So I took some off of this. So these were 0.8s. I took half of that off. I took 2/3 of that off. What else did I take off yesterday? Pounds. Oh, Aussie New Zealand, yeah. Obviously, New Zealand, I'm in. Well, I was in fairly deep drawdown. I was in 5.5% on this yesterday. but we've had a little push up this morning, which has helped a lot. So I got out of some of this as well, older positions on this. So these were that was my very first position up there. Let's look at the hourly so you can actually see what the position sizes are. So that 0.5, I've reduced some of that off. So that was a 0.8. That is now a 0.5. This was a 0.8. That is now a 0.4. This was a 0.8. That is now a 0.4. This one here was a 0.8. That is now a 0.6. So you can see basically I just used the profits that I made on the DAX to just get rid of some of this, just to ease it a little bit. So I was in 1.23 yesterday. So I've taken 0.2 off of the position size. So I had 1.23 lots on yesterday. Now I've got 1.04. What do I want? So that's basically just an example of using your profits to reduce your drawdown. That's drawdown control, which is all covered in the bootcamp. But basically, I made a decent amount of money yesterday. And so rather than just saying, hey, I had a 5% day, I used more than half of it to reduce my issues, which is Aussie New Zealand, really. And I took a little bit off the pound US dollar just because it's going, the pound, I'm just not sure about this pound. Why we're getting this strength in the pound? I think it's just a profit take move happening on the pound. It just happens so fast and so hard. I'm just a bit worried why we got such a big, strong move on it. So I decided just to scale out of a little bit of this because I'm just not sure on this pound at the minute as to why we're getting so much strength coming through. I'm worried. What I'm worried about with the pound is that they are buying into the announcement, which means that we've potentially got another couple of weeks of upward momentum coming. So you can see here, that's what I'm worried about. Is them pumping the pound into the rate announcement on November the 7th, not the rate announcement, the budget on November the 17th. So that's why I just sort of wanted to reduce a little bit of the risk on this. And obviously, as you know, yesterday, Aussie New Zealand, and this is why we do drawdown control. Aussie New Zealand yesterday, my average was sitting up at 200, just over 200 ADR. So now you can see my average has been brought down to under 150 ADR by doing that drawdown control. So the whole point of drawdown control is to get this average under control, closer to price, so that you can get out of the position. Because you're wrong. I'm wrong on this. I'm temporarily wrong on this position, aren't I? I've been temporarily wrong on it for weeks. It will, at some point, push back up, but I've got to keep on top of this drawdown. Otherwise, it just gets, out of control. The other stupid thing I did yesterday, which I will be proven stupid or not, is gold. I don't trade gold, as you know. If you've been in here for a while, you know that I can't stand the thing because it just, every time I trade it, it burns me. So I saw this move yesterday on gold. It's 200%. I think it was 200 or was it 225? 529. Yeah, 200 ADR-ish, something like that. It was too tempting. The propulsion gaps of this size, I mean, the propulsion gap actually started on this candle here. And then obviously we did that. Propulsion gaps of that size, yeah. I would be astounded if we don't pull back into this at least half, if not back down to resistance. You can see where my TPs are. Back down to support rather, down here. But that's an ADR move to the downside to even get to support today. So, that's a more protracted propulsion move there. And you can see obviously the retracement. Big move, retracement. Big move, retracement. Yeah. So I'm looking for some kind of retracement. So I took a position on it yesterday. We've had a reverse alert on the hourly this morning as well. So I took that one and I put a scale in position underneath the low there. So if the move started and it was going to be an A-shaped recovery, which was what I was potentially anticipating, I got into a second position. And then as that move, if it started, I would anticipate sellers hitting hard, because obviously these buyers would all see this retracing. They would all escape their positions. The sellers and the mean reversion traders would start to jump in and this thing would just come down fast. So I put 2 scale-in positions with a view to looking at it this morning and hopefully getting out with a profit. we've just gone into an accumulation and we're pushing this morning. So I hope I don't regret this one. But as I said, every time I try and trade gold, it kicks me in the arse. So it's the first time for a while we've poked our head above the parapet. Yeah, and we poked our head above the parapet with a fairly big move, haven't we? We're extended on the 4 hour above the 75. So I'm pretty sure we're getting a profit take move on it. It's just whether or not I'm going to have to sit this through. I've got a TP on this up here. I need to put a TP on that position. Sorry, a stop on that position as well, which is going to cost me. Do you know what I'm going to do? I'm not going to muck about with this because it's gold and I hate it with a passion. I'm taking this second position off if we break yesterday's high. So I'm going to take 0.5% loss on that position above the highs. This one is, I think, yeah, I'm going to reduce this to 0.5%-ish roughly as well. So it's a 1% risk. You know, I'm not mucking about with gold. I've learnt my lesson. I'll either lose 1% on it or we are going to get a dump. But yeah, I took a trade on it yesterday. So you should probably all long it because I always lose on gold. Anyway, up to you. But that is a hell of a gap. Hell of a gap. So it's lovely to finally see gold on your list. Anything can happen in this industry. Yeah, it's not normal. I'm very overexposed now. Obviously, the other reason I was sitting here watching it when we got the ADR hit at 175, thinking, "Oh, that looks good," and I put a little pending order under the low, and then it pushed up to 200, and I was like, "It's just too good to miss." And as soon as this thing started to come down, I just went bang. Yeah, I'm in. As soon as I saw that candle, I was like, "Right, I'm in." And I put that pending in, and obviously, as soon as we got the reverse alert, it went nah. So it does. It torments me. But I'm now really overexposed on US dollar, so I need to get out of this if it pushes up. I don't want that much exposure on the US at the minute, especially with the midterms. So it's either going to knock off yesterday's profit or we're going to get a run on it. We'll see. Market's open. So let's just see what happens with the DAX this morning. I just need to open my futures platform 1 second. Yeah, so we'll see what happens with that. I hope you don't mind I ask you to how you estimate drawdown control. You have to think positively. That's going to fix it. Yeah, gold is coming down. I'm thinking positive. But my programming logical brain is thinking every time you touch that thing, it kicks you in the ass. So I have to go on what my data says. My data says gold and I don't get on. But we'll see. My data also says when you get a propulsion gap that big, it's going to get retested. So, you know, opening range high is in. Oh, I'm on the wrong time frame. Opening range, not too bad today. 35 pips. Sorry, Richard, how you estimate drawdown control. So I covered this a little bit yesterday. I'm going to be patient this morning. I got a little bit too eager yesterday on my futures account, and I blew it. The evaluation, that is, not the. I haven't got a funded account with. This is my third attempt now on this bloody account. On Take Profit Trader futures. Oh, if you want, while we're talking about Take Profit Trader, just quickly, while I think of it, they're running a promotion at the moment. If you use World Cup, you get 50% off lifetime subscription. So if you want to try futures trading, you get a Ninja Trader license with them as well. But if you want to try it, there's a 50% promotion on at the moment. You use World Cup. Okay, and that will obviously bring the cost down to, I mean, if you want to just try $75 a month. It's $100 a reset, $25 a month. But if you want to go for it, if you want to give yourself a bit of drawdown, which is what I do, go for the 100 and 150 better. Actually, I'm on 100 at the moment. That gives you 2,200 daily and a 6K target off of 120 micros. So you'll get that for $170, £160, whatever. But yeah, so if you're interested in futures and you want to try futures, just use World Cup, and that I think it is running until November the 19th. Obviously, World Cup kicks off on the 20th of November. So you only do one valuation at a time. You can only have one funded account at a time. You can do as many valuations as you like with them, but you can only have one funded account. So if you run 5 evaluations and you pass 2 of them, they'll only give you 1 funded. The other one you've passed will be dormant. So when you blow that other one, you can then use the second one. So if you want to stock up, but obviously bear in mind these are monthly fees, so you're going to be paying 160 quid, 170 quid a month. So yeah, just to let you know, that's who I'm doing the evaluation with at the moment. Yeah, so I got a bit of over eager yesterday on my evaluation. I hit the daily loss limit yesterday. I was 5 days in, 4.5 grand up on a 6 grand target. It's very annoying, but it's because I wasn't paying attention. But it's my fault, doing too many things at once. So I'm going to be a little bit slower this morning with my my entries. So yeah, so drawdown control. There's not really any right or wrong way of doing it. It's all covered in the Bootcamp, but the way that I sort of suggest you do it is one of 2 ways. First off is looking at the drawdown per instrument. And the second is looking at total drawdown. And they've both got pluses and both got minuses. So for me, when this total drawdown starts to get to 10%, I'm thinking, right, I need to do some aggressive drawdown control on this because I'm not comfortable over sort of 15%. I will want to be out. So I start to get aggressive around about 10%. On an individual instrument, somewhere around about the 3-ish%, I would start thinking I need to do something about this, which is why I got rid of a load of Aussie New Zealand yesterday. But if I've got something that's in like 4% drawdown in total, and I've only got maybe 7 to 8% on my entire portfolio, I might not do something about it today and give it the day to play out and then look at it again tomorrow. So there is no real hard and fast. It's your comfort level. But the whole point of regularly banking profits on anything that goes your way, so anything that gets to like 0.5% or 1% or whatever you want to have your figure as a target, you pop it over here, and that accounts for individual trades. If you've got an individual trade that's 0.5%, bank it. You can always put it back on again, but bank it. Use all of this to do your drawdown control. So you take drawdown control off of the thing that is causing you the most pain. And the most pain isn't necessarily the thing that's in the most drawdown. It might be the thing that has the largest lot size, i.e. the speed of the drawdown. So your lot size will control how fast you go into drawdown. Your total drawdown is obviously a monetary amount. So if you've got something that is very, see if let's say, for example, you've got a trade which is spaced out 1 ADR apart. You've only got 4 positions on, but it's 4 ADR away from you. You might only have something like 0.6 lots on that. So the speed of drawdown when this moves further isn't going to be massive, is it? It's not going to go fast. If you've got something where you've got twice as many positions on and you're overexposed on it, that will go into drawdown percentage and monetary loss a lot faster because you've got a bigger lot size, which will grow into a bigger loss quicker. So you have to concentrate on what you think is going to cause you the most pain moving forward. For me, Aussie New Zealand was the thing that was causing me the most pain because of that, having too much lots on, but also the fact that I was so far away from ADR. I was over 200% away from price as an ADR measurement. So I needed to get that average closer to give me a chance to get out. Yeah. So there is no real answer to that question, unfortunately. It's a, what do you feel is going to be the thing that is going to hurt you the most moving forward? For me, it was the Aussie dollar, New Zealand dollar, because this was up here and it was too far away. So I needed to get this down. So that's why I focused the majority of my drawdown control. But drawdown control can be done either using normal profits that you gain or aggressive. Like yesterday, I got aggressive on the DAX and it worked. Sometimes it doesn't. You've seen me, if you've been in here for a while, you've seen me get into aggressive positions. Euro Swiss, I got into aggressive positions on Euro Swiss. And that thing kicked me in the arse. There goes. There's some of them are still on here, look. Yeah. Some of these aggressive drawdown control positions, I know these aren't the aggressive ones, but some of these aggressive ones, I was getting aggressive on things like that. I'm just getting stopped out over and over and over and over again with aggressive positions, as this thing just would not give me any profit. And eventually it broke. And this is very similar to what's happening with the Aussie New Zealand. It's just a long-term multi-week squeeze. And this is even longer, this one. And this is why it's so important that you space out your positions nicely. If you get that on, by the time you get down to here, you're going to be in something like 15% drawdown on that one position alone. It's going to hurt. If you get in there, and there, you'll probably be in something like 3% drawdown here. 4% maybe. That's manageable. But, you know, if you get yourself in, and you will, and I do as well, everybody does, if you get yourself in too fast and too hard because you think this has got to be it, this is going, look at these positions I've got in here. If this thing comes down now, I'm going to be in pain. I'm just going to have to shut them and go, I was wrong. But when you get in aggressive and they work, yeah, when this gets up to here, I'm going to make a nice little profit. And I don't necessarily, I'm not going to close out all of this. I'm not going to close the whole position. I will close all of these out. And I will take a partial off of these again. So I will be banking green and reducing lot size and drawdown in case this comes down again, because I can always add it back on again, can't I? You've got to treat each individual position like a trade. Yeah. So this 0.17 right now, I can bank it right now and put pretty much 0.5% in the bank if I want to. Yeah. But I'm not going to at the moment because I've done some drawdown control on this. But if I needed to, I would do. But it's something you can't really, there's no hard and fast rule. You know, last month, I was sitting on, at the end of last month, I was sitting on 30% profit. And I can't remember what my drawdown was at the end of last month. But even if it was this, I could have just gone, screw it, I'll just shut the lot out and take 22% this month. This is going to have a big impact on how you manage drawdown control and when you do drawdown control. Because if you've got virtually nothing in the pot, it's going to be hard to do drawdown control, isn't it? You're just going to have to take some losses. But if you've got 17% in the pot instead of 7% in the pot, I can say, okay, I'll take one off that, I'll take one off that, and I'll take one off that, and I'll have a really nice, relaxed weekend. I'm not worrying about anything. But you don't know what that's going to be. So again, the rules will change. So when you act on drawdown control or act on drawdown will depend on how your month's going. If you're having a flyer, you're going to be a lot more relaxed. And you'll find that the more relaxed you are, the more this will actually play out. Everyone gets uptight about, oh my God, I've got 3% of drawdown. And then, as I said, right, I'm in 8%. Let's look at this tomorrow. Yeah, quite possibly tomorrow I'll be in 2% profit with 3% banked. I don't know. I've no idea. Yesterday morning, I was sitting in, 10, 11% with nothing. Now I'm sitting in with 2% and 8%. So that's gone down by 3%. That's gone up by 2%. Yeah, you just got to let it flow, let it play out. You know, and again, like I said yesterday, go back in time, look at what happens after you get these massive squeezes. Go and find me an instance where that happened on any chart. You will see that that will happen shortly. Has to. These guys have got to get out of these positions. Otherwise, they make no money. Yeah, they're squeezing. They're squeezing. It's a short squeeze. It's just squeezing everybody. So yeah, hopefully that helps. But go and watch the one on drawdown control, which is I think it's 4. Greg's there.
Fail the first time they tackle the currency markets. It's because they don't have the right list of things.
Oh, this is twice in a row we've got Greg now.
Before they place a trade. Let me show you what I mean. The 7-point pre-flight checklist is something I learned on major bank floors over 20 years ago. It's what the currency big dogs, as we called them, used to make sure they had the best chance of success. Now look,
it would cost you just $25,000. Anyway, sorry, Greg. So 1 hour in on day 4 is controlling drawdown. And 1 hour 54. I don't know who's done this, but somebody's gone through and they've done all this. It's really good, whoever's done it. But all this sort of indexing of the videos, which is great. Some examples of drawdown control, big squeeze, an example of a squeeze. So there's lots in it. Video 4 is the one you want to watch for drawdown control. That's the one that is the. So there's lots in it. Video 4 is the one. Is the talking to myself. Is the one that will tell you everything you need to know. You have to think positively. Great rational thinking. Good. Yes. What's your take on US dollar Swiss? Right. So we'll have a look at. It's Wednesday. We'll have a look through all the charts today. I thought this might happen this morning. This is why I didn't want to take this ORB. I was thinking I'm going to take an ORB this morning, but I was unsure. I get the feeling, because we've got the midterms at the minute and we're kind of waiting at the moment on these results. I've got a feeling we might have a sideways morning this morning. I'm just going to quickly see what's going on with the US indices. Yeah, Globex has been really flat this morning. Be careful this morning. I'm probably going to sit on the sidelines of the DAX this morning. Anyway. Oh, the other thing I wanted to look at, morning Amit, Bitcoin. This thing killed everybody yesterday again. Look at that move. So 8,000. Actually, this is thrown out now. This ADR yesterday was 5,300 or something. Yesterday's move was 352,000 or 35,000. So we had a 35,000 pip move on a 5,000 ADR instrument yesterday, Bitcoin. Look at this on a normal. Look at normal price action on this. Yeah. We get these every now and again, don't we? It's just basically crypto dying slowly. Death by 1,000 cuts. Oh, hope, quick, buy it, die. Hope, die. Don't touch it. It's dead. If you're going to touch it, short it, but don't buy it. Everyone's going to start buying it now, thinking, oh, this is the bottom, this is the bottom. It's not. It's dead. So quickly look at indices, and then we'll go for the FX pairs. So another bull day yesterday. We are up at the 200 on the DAX now, and obviously the 200. I don't use moving averages for bounces, as you know. I use them as an area we should start looking for trend continuations if trends are going to continue. But the 200, obviously, the 200-day moving average is well respected across lots of instruments, not because it bounces off it, but it's an area where if we're trending, we tend to at least pull back if we're going to start a new one. So yeah, we're in a very deep pullback at the moment. This area here on the DAX would invalidate market structure. This area, I've already got it drawn on, is where I was expecting to get rejection, which we did, but we pushed up through that yesterday. So we're pretty exhausted. This is 4 up days now on the trot. We got a lovely 3-bar reversal in there, which seems to be playing out nicely. But yeah, it's pushing very, very hard. So I don't think we're going to get to that level. And we've still got that gap to fill down here. So we're stalling out. And I think tomorrow CPI is when we're going to start this move. So today could well just be a rotation day. We're going to get potentially an inside bar today, which is basically the pause before the drop. So all indices yesterday, we had that little push up, but obviously it all retraced at the end of the day. It was a really strong rally across the board yesterday, didn't stop. And then it came down like a house of cards. And you can see where we closed yesterday on the Dow. Yeah, this is a rejection, a solid rejection. So today I'm expecting either an inside bar or a bear move to start. But obviously with CPI coming up tomorrow, I get the feeling this is just manipulation ahead of jumping ship again. So next leg down, I think. And again, we don't want to invalidate that. Yeah, so looking at all the indices, if market structure is going to hold short, this is exactly where we are going to start to roll over. Somebody posted yesterday as well a document from, I think it was Paul, wasn't it? Yeah, a document from Zero Hedge about the volatility index related to the NASDAQ. And we're at a point now where historically, every time we've got to this level of volatility, we get a dump. So it's very much on the cards, I think, for next leg down. And as you can see, the NASDAQ, when you look at other indices, so looking at the Dow, had a nice little run off of earnings. The S&P, not a bad little run off of earnings. Look at the NASDAQ. Tech stocks, typically the thing that's been propping up the economy, has tanked. Everything is all about tech stocks. Tech stocks didn't even manage to get a reversal in earnings fortnight. We just didn't do anything. So you can tell this is really heavily weighted at the moment for a short move. There's no buyers out there on tech stocks, and tech stocks make up a lot of the stock market. So yeah, I think we're ready for next leg. I thought we were ready for next leg here, to be honest, didn't I? But I didn't think we were going to validate that level, and we are retesting it now. So a break back down below this level and leaving that intact, I think will open the floodgates, and then we're going to start to get these big old bear moves started again. Yeah, so big bear candles on board. The fact that everybody jumped ship on Bitcoin, on crypto yesterday as well, another sign something's coming, something's coming. So we're just waiting at the moment, which is why I'm building a short position here on the DAX. Just back inside the opening range at the moment. I'll be looking for an opening range breakout to the downside today. This is I'm heading down to this gap fill. This is the gap fill. Oil yesterday as well. Big down day for oil yesterday. Again, oil's bewildering to me. We've got inventories this afternoon, 3:30. It's always 3:30 on a Wednesday. So we'll see what happens with crude this afternoon. We could well get a very decent move off of this. We've had a couple of negative barrel counts on the... oh no, I thought we had a couple of negatives. Oh yeah, we had one there, didn't we? October the 19th. So That's an interesting pattern that's forming. I was going to say we're going green, red, green, red, green, red. But if it comes out negative, basically it's good for oil pricing, because if we've got less stock than forecast, we've now got a cap in place on oil production. So if barrel counts drop, prices will rise. So now we've got this cap in place. I'm hoping that these figures will actually now start to make sense. If we have less available, prices should go up, which is how it should work with a commodity. It's a supply and demand thing. So oil this afternoon, 3:30, if you are in oil, you want to be looking for negative figures, ideally, so that we'll get a push on that. But we had a big push. We've rejected this resistance on the daily up here, but we are still within the lows at the moment. So this is exactly where I would look to buy on oil right now, actually. We just had a reversal alert there as well. Let me just move that line down. So that daily low there, or just above it, really, somewhere around here is where I would look potentially for entries. So you're there pretty much. It's these lows. That's where we want to be focusing. So it's getting to a good spot, 80, 87, 88 a barrel for buying. Obviously, we're assuming that we are going to continue current market. Whoops, too far. Current market structure. Break that high. So higher high we're looking for up here, and retesting that high. So again, it's lovely. We've had lovely structure on this since I called this bottom here. I didn't really call it, did I? I just said this is where we should start looking for longs. We've had beautiful market structure on it ever since. It's just done textbook market structure. So if it's going to continue to do that, we don't want to see this get invalidated. We want to see this hold. This is a 61 or a 72 retracement on the move. So this is a 72 retracement on the move. It's exactly where we want to see a deep pullback start to rally up into the next leg. So yeah, oil looks good for longs. Now I've got into gold, I can't possibly take oil. that's just a leg too far for me, especially after it's pushing so far this morning. That's a hell of a move, isn't it? This is why I don't trade. This is why I don't like this thing. It's so erratic. It's like just out of nowhere, it just goes and like floors it, doesn't it? Floors it. Mental. And now is the moment that we buy gold. People are moving back to gold. Yeah, try it. If you want to buy it, buy it. It all depends. I mean, the thing with gold, it all depends what happens with the US dollar. This thing shot up yesterday because the US dollar collapsed. Not collapsed, but US dollar was very weak. It had a little bit extra power though yesterday, didn't it? It didn't move. This moved 200 ADR. The US dollar didn't get 200 ADR. So this wasn't purely US dollar related. This was gold buying as well as US dollar weakness, which gave it that little bit extra kick. But yeah, I mean, if you want to buy it, buy it. That's the level, obviously, which is very much on the cards for a retest. So yeah, but when you get up to there, I'd be thinking twice about buying it. The problem with gold at the moment is the largest hoarder of it is Russia, and they have an import-export ban. So you can't touch gold at the moment, which is why it's been weak. We've had strong US dollar, and there's not been a market for gold because it's stuck, a lot of it. Which, going back to the commodity prices, supply and demand and things, you would expect that would be good for gold prices, wouldn't you? If there's less of it available, you should be higher pricing. Not happening, is it? The whole market, the whole economy is everywhere, and the way that things typically tend to work is just not working that way at the moment. So, but yeah, you've got as much chance of this going long as you have of it going short, definitely. Short term, though, I think we're quite possibly, after a push like that, after a big strong move like that, we tend to get a pullback, yeah, of some description. So I'm not looking necessarily for a TP down here. I'm just looking for some kind of accumulation pullback today to get out. This is a scalp for me. I'm not position trading it. I've got a stop on it. It's a scalp. You know, and it could well get up there, and if it does, it does. But yeah, but certainly, you know, you can't argue. There's a lot of buyers around at the minute, but you know, you'd have argued it there, wouldn't you? Wrong. Yeah, it's 50-50. It's always 50-50. It's going to go up, it's going to go down. I don't know which. Got an inside bar forming on the DAX at the minute. We've got an inside bar holding at the minute. So we've pushed up, run into limits, pull back down again, and basically we're just sitting at the moment inside this range. So if we break out the low of this range, I think we've got a good chance of running short today. We'll see what happens. If we just test this and pull back inside, I think we may well be in for one of those horrible rotation sessions, but we'll see if we can get this low broken. I'm probably going to take an opening range short. I've got a position on here, so I'm not going to take it on this account, but I'm going to take it on my futures account short. I'm going to trade the NASDAQ though. Seymour, you have good economic insights. How much time do you spend researching each week? Not a lot. I don't have great economical insights, really. It's just supply and demand and keeping your eyes on the fundamentals. Yeah, I mean, the things that drive the market are inflation, interest rates, unemployment, anything that's red news, yeah? GDP doesn't. But you just have to keep your eyes on these things and keep your finger on the pulse as to which way you think things are going. But at the end of the day, if you want to know which way things are going and which way the market is inclined, use the daily and the quarterly moving averages on the daily chart, and they will show you which way the market is inclined. And that's what you want to be doing until something fundamental shifts. So all I do is I pay attention to where the market's moving and pay attention to fundamentals. If there's something fundamental that comes out that says we're going the other way, i.e. US dollar is going to collapse because we're suddenly going to start a civil war or something ridiculous, then yeah, I want to be buying gold, don't I? Because it's just a US dollar cross. You know, you can never tell when a trend is going to end. It's just a case of being aware of when things are going to happen. This is why the news is the first thing I check every morning. What's going to happen today? Nothing. What's going to happen tomorrow? It's all going to go nuts at 1:30. You just got to be aware of when things are going to go nuts, basically. So I'm just watching this DAX break. Stop breaking. So we held that low. I'm looking for an opportunity to get short on the NASDAQ, basically, on the futures. But you're articulate. Well enough ass kissing. That's okay. I don't mind ass kissing. If we're going to go into rotation, this is not a bad little long. Just back up there. Short term. No, I don't fancy it long. I'm going to leave that for the moment. I don't think I'm going to trade it this morning. I'll wait to New York. Right, I'm going to whiz through. So looking at the ADRs and everything, this is a little bit unprecedented. I hate that word unprecedented because it's used all the time at the moment to do with COVID, the environment, the economy. Everything is unprecedented, isn't it? Everything's unprecedented because stuff's never happened before. But again, no ADRs today. Nothing's hit weeklies. We're on Wednesday. We've had no weeklies. It's very at the moment, isn't it? Nothing's hit monthlies either. So considering the amount of movement we've had over the last few days, I'm quite surprised we've had no weeklies hit. So it's obviously all manipulation rotation happening at the minute ahead of CPI. So there's nothing to look at there. 4 hours, we've got a couple, only just hit though. Euro US dollar, I'm in already. So I've got a short on Euro US dollar, got a second position on. I've got 3 positions on this, not 2. So got one there, one there. I took another little one this yesterday, just because of the size of that movement. I had another position on yesterday, and I've no idea why it had a stop loss on. But I took a loss on it, and I got a feeling when I was in the live room yesterday, I must have accidentally dragged a stop loss from that position or something, because I don't, obviously, I don't use a stop loss on these small positions. So I've no idea why I stopped out on that. But I did. But it's probably because actually it was too close together. But I wouldn't have put a stop all the way up there. I don't know why I would. But anyway, I did. So I stopped out on something yesterday on Euro US dollar. So anyway, I added one back on, but I added quite a little bit of a smaller position on up there after that push. So this is now day 3 up on Euro US. So we've had that massive day, then we had a continuation day, and yesterday we had another big day. So this is 3 up days. We're due a pullback. We've got this area here, which is supported twice at yesterday's low. We've also got the start of this propulsion move where we've got the reversal all the way down here at 200 ADR. But it's all going to rely on CPI figures. So I'm just scaling into one more on this ahead of CPI. We're up at, yes, there's no way I would have put a stop underneath a high. That's just ridiculous. No one would do that, not even me. So I have no idea why that stop was in place. I looked at my P&L, I was like, why has 0.5% disappeared? But anyway, so we're up at a double top, which held beautifully yesterday. So yesterday's high, if they take out yesterday's high, because obviously what happened with yesterday, there's a beautiful 3-bar reversal here on the hourly. Push, pause, pull. Yeah, so a lot of people will have gone short here. Everybody stops up there above yesterday's high. So that's pretty logical. We're going to head up there this morning. We'll see what reaction we get off of that. If we get a decent sell reaction off of that, we're probably going to pull down into this area and just hold ahead of CPI. So watching that this morning, I'm not going to do anything more with it. But if you're not in Euro US dollar and you want to get in, we've got a lovely 4-hour RSI extension at a double top, which is also in a previous propulsion gap. And that gap is the first time it's been tested. Second time it's been tested. That's the first time it's got tested and it rejected hard. Came back down to double bottom. This is the second rejection. So the sellers defended this area, which caused this move here. Yeah. And now we're back here. But this isn't really going to be defended by the sellers. This is going to depend on what happens with CPI figures tomorrow. So if CPI obviously comes out as a positive figure, US is going to fly. So we'll see. We'll see what happens. I mean, it doesn't necessarily mean it's going to fly. It might not do. Depends what the figure comes out as, doesn't it? But we would expect, hopefully, some US dollar strength out tomorrow. So that's extended. We've also got the US dollar yen extended as well. Extended to the downside. So this yen intervention is holding well. So that was the first intervention. There's a second intervention there, and obviously that was the previous one. So this one is holding. We haven't managed to come back up and retest this intervention at all. We also, it's just about to actually, isn't it, today, by the looks of things. We haven't managed to crack the low that was putting off the back of the interventions, which we are testing right now. So again, this is a really good spot for a buy. if you are inclined to take a long against the yen. But bear in mind, if we get back up to 150, Japan is going to intervene again. So I think personally. So if we do start to head up there, you don't want to hold it for new highs. I don't think you get them. So not the best in the world, is it? Nothing on the RSIs on the 21, nothing on the 14s either. So it's all flat. Amit, I'm going to wait and watch on the sidelines today, yeah. If you're not in any positions at the moment, I would say probably that's the best thing to do. But if you want to take a speculative position, you want to be getting into it today. So if you're speculating that we're going to get some CPI positive, then yeah, you need to be building a long position. If you speculate that we're going to get a negative, you want to be building a short position. But look at this, look at the figures at the moment. Yeah. Look how many of those are green. Look how many of those are red. It's more than likely we're going to get a positive, but you never know. You know, we didn't there, we didn't there, we didn't there, but we did on the rest. And the way that everything's going at the moment, you know, we are likely to see continuing inflation. However, the Fed rate is up very, very high now. So it may be that they are going to get on top of it starting this month. Again, we don't know. And this is why this is the most important figure you're going to see coming out. And inflation and interest rates are the key to FX directional bias at the moment. So when they start to get on top of it, we're going to see devaluation. So we will see. We will see. Tomorrow is a big one, but they're forecasting 0.6, so they're forecasting an increase. So if we get a forecast, brilliant. If we miss slightly, still, it's higher inflation, isn't it? If we come out previous, I think we might see a little bit of weakness in the US, but you know, it's all speculative. So if you want to get into a position ready for tomorrow, i.e. try and get a little long in here, maybe add a little bit if we break above that high today, get yourself a break-even average on it. If we get decent moves, happy days. Obviously, if we're going to get a big move tomorrow, you could just put a pending order above there and wait for it to happen. You know, you could straddle it. CPI figures are one of those where we don't tend to get the whipsaws, you know, like the non-farm, we get whipsaws off non-farm. CPI, we tend to get a directional move because the market has already factored in most of the CPI, what they think is going to be happening. So you tend to get a big sustained move off the back of these. So as I say, everything's waiting for tomorrow, really. Aussie New Zealand. Oh, good boy. There we go. We're off. So Aussie New Zealand, we got a break. Whoops, what's that? Oh, what did I do at TP? Which position was that? So yeah, Aussie New Zealand, we need to break that high. So we need a hold above ADR today, ideally. This is weak New Zealand dollar causing this, which is lovely because I've got a New Zealand dollar yen short on as well. So let's whiz through everything. If anybody's got anything specific they want to concentrate on, let me know. CPA comes high, then we expect Fed to intervene more on interest rate hike, which will make US dollar go high again. Well, no, CPI inflation. It's a double-edged sword. Inflation boosts a currency's value, but causes recession and lower spending, which creates recession. Increased interest rates tend to devalue a currency short term until it finds what the interest rate impact is. So you tend to find if interest rates get increased, the currency will devalue. And the same with inflation, that will also devalue. If that comes down, it comes out as a lower But, you know, you just have to wait and see. Again, the thing with news, and the thing that you have to understand with news, and this is why news traders get so confused when people first start to trade news. They go, you know, it's the textbook says, let's go to a week where we've got some. The textbook says if it comes out green, it's good. If it comes out red, it's bad. And overall, that is true. But if it comes out red and the market has already been dropping, yeah, it doesn't necessarily it's not going to drop further because it's already extended and stretched. And you've got people here that are going to want to take profit, and those banks use the news, even though it should be a negative move, to push price back up to take a profit. And then everyone goes, oh, let's go long, and then they tank it. So this is why news trading is so incredibly difficult. Look at non-farm payroll last week. Absolutely no difference whether you went long or short last week. Made no difference whatsoever. You went long, they took you out. You went short, they took you out. It doesn't matter, does it? Because it's green, doesn't matter. Doesn't matter at all. With on-farm, it's just, yeah. Non-farm payroll, green number. What happened? Collapsed. You know, it just doesn't matter, does it? The figure doesn't matter. It's whether the market has factored in, priced in that move already, or whether it hasn't. And the shock factor. So if it comes out way different, and the markets, let's say the market's factored in an interest rate rise, and we're forecasting 0.6. If it comes out at 1.2, yeah, even if it's been factored in, that thing's going like that. It's going parabolic. If it comes out at 0.6, they might go like that. They might go like that. But you just don't know what they're going to do because you've no idea how much has been factored in already. You can't tell because you're not a bank. You can't see the P&L. So you just have to take it with a pinch of salt and deal with it. But typically, green interest, it means a boost in currency. Waiting for Dixie to sustain below 109. I haven't got Dixie. Right, so Aussie dollar CAD. Shorts at the moment on this one. Waiting, obviously we can see we're waiting at the moment. We're waiting. Everything's waiting at the moment. This is probably going to be a very quick analysis of everything. But yeah, everything at the moment is kind of sideways, most of it anyway. So Aussie dollar CAD, be looking for continuation to the downside. We're bearish at the moment. Market structures, very nice. We have put in a higher low though. So we are basically contracting symmetrical triangle style at the minute. But based on potentially US dollar strength dragging the Canadian dollar and oil prices increasing, we should see Canadian strength, and that should be better than the Aussie. So looking for short opportunities on it. Obviously, you had a reverse alert there, which worked beautifully. But it didn't get very far, did it? We didn't make a new low. So it's a difficult one at the moment. There isn't really a decent market structure on this. It's just, as you can see, high and a low. We're inside at the minute. So difficult to tell. Aussie dollar Swiss, like it's short, but again, we're just in an accumulation at the moment. Continuation short based on Swiss franc strength. Again, Swissies are doing well on inflation. Interest rates, they're not having to put them up dramatically. Aussies didn't put their interest rates up by enough, made it weak. So yeah, it's all should be continuation to the downside, but again, nothing much happening at the minute. So can't really do a lot. It's not extended. It's not getting extended anywhere. It's just flatlined. Aussie yen. All the yens. I'll whiz through all the yens at the same time. Again, my bias on the yen is based on. Oh my God, more lockdowns in China. And North Korea have fired another ballistic missile. Oh, good. So yeah, my bias on the yen is basically when are they going to intervene and what is their intervention going to be moving forward. So the fact that we've had so much weakness on the yen and they've now put unofficially 3 interventions in place, means that they are at the point where they are doing something about this this weak yen. So I'm biased to take everything short against the yen at the moment. The best things to trade short against the yen are going to be things that got extended, like the New Zealand dollar, which is what I'm on at the moment, New Zealand yen, Aussie yen, Euro yen, pound yen, anything that's going to be weak. Aussie, US dollar and the CAD probably going to be stronger. So I'd be inclined to take shorts on all of these and assume that the intervention that's gone into place is holding, which it looks like it is across all the pairs at the moment. So CAD yen, ignore that, that's the oil target. CAD yen, we're going sideways at the moment. Yeah, so the trend has now sort of finished. We will probably be moving something like that, but if there's an intervention, obviously a big spike down like we had there. So I'm looking basically to get into any positions short on the yen with a view to the intervention making me the money. So not extended anywhere at the moment. Swiss yen, same thing with sideways. You can say we just sideways. We've got a big reverse alert there. We've had a reverse alert there. Reverse alert after reverse alert is just an accumulation. So there are your interventions. And since then, we've flatlined. So the trend seems to be over at the moment. Euro yen, same thing. We've pushed up, intervention, stuck. Pound yen is just everything with a pound is a nightmare because of that. It's very difficult to tell what the hell's going on. But obviously, because we had a weak currency against a weak currency, we got a range on the pound yen. So again, shorts. New Zealand yen, I'm already in, which is in profit at the moment. Not a lot. So again, yeah, looking for just weakness New Zealand and also looking for yen strength. So it is still, this is the New Zealand dollar strength, which is now, as you can see, starting to peter out. So looking for that to roll over or potentially come down hard on yen intervention. This is going to move tomorrow as well. Be aware. This is going to move on CPI figures for the US, because whatever happens with the US tomorrow, money will be flowing in and out of the yen to fulfill those orders for the US. So we will get some movement on this tomorrow as well. And the US yen, as I say, the 150 level is basically where it was called as an intervention, and we got it. If it gets anywhere near there, that is where I would like to short US yen if we can get up there. But equally, if we break that level, we're going to flush. So I even like this short, but we need to see what happens with the CPI figures tomorrow. If CPI comes out as positive, it's going to give the US a bit of strength, which means we'll probably just go range bound on this one. So that's all yens. As I say, I'm really not interested in anything yen too much at the moment. I've got a New Zealand yen on because the New Zealand was pushing so hard. It really needed a rest, and we've got that yen strength starting to trickle in now. So the New Zealand yen looked like a good opportunity, which is why I was in that one. But I'm not actively searching for yen trades at the moment because it's all a bit up in the air. Aussie New Zealand, as you know, I'm long. I've got caught out on the trend basically. So great example of a trend coming to an end. Yeah. So at some point, that 72 stops holding. And that's where I got in, looking for a continuation leg. And stupid Aussies decided to change their rates. New Zealanders went, yeah, we're clever, we're going to do our rates. Aussies went, we're not going to do our rates. And it completely changed the bias on the pair within a week. So obviously I got squeezed. So in it still, digging my way out of it basically. I've made profit on this, believe it or not. I've banked some here, which is great. So I've actually made some money here. And obviously this drawdown will have wiped out the profits that I made there anyway. So at the minute, I'm just sitting here in this accumulation, hoping that we get a pullback into the 24, and then I'll be out. But New Zealand dollar has had such a good run. I think we should see some weakness starting to creep in on it, but it's how long this accumulation is going to last. We could, sit down here and muck about for a week or two. You just don't know. Look at this sort of movement. We could sit here and just grind like this for, a good couple of weeks, 2 or 3 weeks, or we could get a decent pullback move. I suspect we'll probably get a decent pullback move just because of the strength of that move there. There's going to be a lot of people on board with a lot of profit wanting to get out. And when that starts, the buyers are going to start to kick in. They're going to see this low that I drew in here. We're going to see these lows, these previous lows being respected. And they're going to want to buy it. So I think we're going to get some decent movement to the upside on this one, but just waiting. Aussie US, like it as a short based on US dollar strength. But again, all down to CPI tomorrow. Nothing we can really do. If you want to get in today, you can do. It's not extended anywhere. Last trade on this was yesterday. We had one in there as well. That's that one I took. Look, you can see my trade is there. So I got in on this extension, and then I thought twice about it because I had too much exposure. I would have got out the next day, but it didn't happen. But you're just waiting on the US dollar with everything at the minute. So it's a good spot though. This is a lovely high. We had a lovely big long area of balance for a good week or so there, which we came and retested, and the market didn't let it go higher. So this area here is kind of the high at the minute. The market's not interested in trading above this level. We've attempted it, taken all that liquidity, and we pulled back down. So again, it's another rejection of this high here. So it's a good spot potentially for a move back down towards these lows. And obviously, if we get decent CPI figures tomorrow, you're probably going to get down to these lows possibly tomorrow. We could, it depends what it comes out as. We could easily get a 150, 200 ADR move, couldn't we, tomorrow? So you're thinking it's going to be ranging today? Yeah, probably. Probably. We did get the break to the downside. I just, with the figures coming out tomorrow, we had quite a lot of movement yesterday, didn't we? We didn't get ADRs really much, but we did get a lot of movement up and down. So there was a lot of manipulation. So with the CPI figures coming out tomorrow, I just don't think anybody's going to want to take any long-term positions or put any big money on the table today. So we're probably going to find we're going to have a rotation day inside bars, which is not a problem because it's an opportunity. If you want to long it up to there. Make sure you get out before you get up to there, and then have a look at a short from up there. If that fails, have a look at a short from up there. If that fails, yeah, we're probably going into a bit of a trend today. But you're not going to know that until it happens. So this is a good long opportunity down here. We've got RSI 14 on Aussie New Zealand as well, as you'd expect, because we've just hit ADR. So yeah, Aussie US, CAD Swiss, a bit of a tricky one at the moment. This one, we're just in the world's longest flag at the moment, which doesn't seem to be break. So we've got this lovely up channel. The RSI extensions have all worked on the 4-hour beautifully, but it's got lovely market structure and it's moving very nicely. But directional bias on it is tricky. I would say it's. The reason it's tricky is because we've got a strong Swiss franc and we've got a strong Canadian dollar being dragged with the US. So hence you're getting a range, but it's just that the Canadian dollar's got the edge at the moment. So it's ranging, but it's in an upward channel. So I don't think at the minute you can really pick a directional bias on this one. We're just hovering, the moving averages are flattening out. So take RSI extensions to the upside. If you get some to the downside, take those too. There's not really any directional bias on it. Just wait for signals if you want to get into it. Euro odd. So I'm looking short on all the euros at the minute. So I was just watching. I'm just watching the futures. There's a couple of big sell orders just come in. One very big sell order come in on the Nasdaq. If you want to, I mean, one or two things is going to happen here, isn't it? We're either going to push back up into range high, or these lows are going to break and we're going to flush. Either way, tight stops. I was just watching the sell orders coming in and thinking maybe this is going to flush out the lows. It's a very, very big order on the Nasdaq. It's 100 contracts just gone in short in the Globex session, which is quite a lot. So it flushed all the way back down. No, I'm gonna get stuck in it. If I get in it today, I'm just gonna get stuck. Hate getting stuck. If you get stuck in a rotation day and you've got it wrong, you can easily chop 3% off your account. And it's painfully slow as well. So I'm not going to get involved. Where was I? CAD Swiss done. So euro, all the euros. So yeah, I like all the euros short at the moment. So the interest rates and the inflation combination that we had last month mean the market obviously is bought into the rate announcement, realized that it's not really having a lot of impact. So the euro has been very weak since then. So I'm kind of got a euro shortish bias on at the minute. But like everything, if it's not going to give me any signals or any movement to get in, I'm not getting in. So I'm waiting for some strength of movement in a direction to try and get a signal. So euro odd, just not giving us anything much at the moment. You had one on for a long, which was fine. But apart from that, these are all kind of sideways now, aren't they, the euros? So that strength move that we were looking at, which was, again, this is what I mean by the market pricing in the interest rate rise and then realizing actually, no, not doing a lot. So looking at that to come down from there. Dow looking like it's building a nice divergence on the 4 hour. Yeah, take it if you want. The trouble is you've got non-farm payroll in there, which has kind of thrown that out a little bit, but you got obviously that downward. So there is divergence there. Yeah. But I mean, I only use divergence as a confirmation. There's an awful lot of instances where divergence just, does not work. It's like everything though, everything. It's a beautiful divergence there, look, which worked. Lovely. That's a very long period for divergence. That's much nicer. Shorter divergence is a much nicer thing, I think. I don't like it when it's that long, but yeah, it is there. So, but we know, it's very extended, isn't it? Everything's very extended at the moment. So yeah, looking at all the euros, EuroCAD sideways at the minute. Again, had an RSI extension to the downside, which has played out very, very nicely. We had one to the upside there. So again, it's one of those where it's playing out in both directions. We've had some strength, we've had some weakness. Not really any directional bias on it at the moment. It's sideways. I'd be sideways to slightly bearish on it, but you could really take it in either direction. I'd much rather be shorting it than longing it at the moment, Euro Swiss, same thing. As you know, I was short this. I got squeezed a little bit too hard on it, too fast. I got in too aggressively on this one, unfortunately. Australia have just announced further interest rates needed to meet CPI. So Aussie just confirming they're putting their rates up again, because they didn't do it hard enough last time. So I'm not surprised, you idiots. Silly John guys. No offense to anybody Australian in the room. I mean offense about my accent, which was really bad. But yeah, coming down nicely at the moment. So I'll be looking for shorts on this. The Swiss franc hasn't been as strong as it should be. Nothing's been as strong as it should be, has it? This is the trouble at the minute. But any extensions on this one? Looking for shorts. You know, that wasn't quite enough to get me out, unfortunately, when I got in here. This is where I entered. So yeah, like it for shorts still. Euro pound, not interested. Flat, sideways, rubbish. I did think about getting in a short. I did actually get in a short here. And I decided to get out because I thought, what the hell are you doing tying up exposure in the pound with the euro pound? And then it obviously collapsed because I got out. So anyway, but yeah, sideways. But yeah, the RSI extension worked very nicely. I just did not like it. Euro yen, Euro New Zealand. Again, shorts on this one. We've got a weak New Zealand dollar at the moment. So probably some kind of pullback and then next leg down. But this is just in a massive, massive kind of range at the moment. You're right in the middle of the range here. So I'd want to see some movement to the upside to start taking shorts on it. But it could go either way. No directional bias on it, really. So either or. You just had a reversal alert on the 4 hour. So we have got market structure shifting to the upside, which is where I'd expect it to get to, but I wouldn't expect it to get too far before it starts to come back down. So lower time frames, I'd be looking for pullbacks and then reversal alerts anywhere up there, really. Could even go from there, from ADR. If we get an ADR hit, that would be a nice short. Euro US dollar, looking for shorts. I'm already short. So just got another position on at that high. And hoping for decent figures tomorrow on CPI to get that move started. But, you do not want to be longing the Euro US dollar at the moment. Yeah. Overall, no reason this is going to change unless the Republicans take over, everybody calls to arms, they take over the White House and you get a civil war, in which case then, yeah, I probably think that's going to happen. But until that, I think the US dollar should be stronger than the euro. Which trade are you in currently? I'm in DAX, Aussie New Zealand, Euro US, Pound US, New Zealand Yen, US CAD, and for my sins, gold. So I just looked at how much profit I've got on Aussie New Zealand. Just thinking about banking something. I might leave it for the minute. See if we can get a decent push on that. The New Zealand dollar is still fairly weak, so pounds. So obviously the pound at the moment is in a holding pattern because we've got the rates coming out on the 17th. Not the rates, the budget coming out on the 17th of November. So at the moment we are a rudderless ship. We've got the Liz Truss cock up, the Bailey bailout. We overshot dramatically, and then we announced that we weren't going to do our fiscal policy. So basically, at the moment, we are a country with a new leader, our third one in a month or two. And we've got no fiscal policy moving forward as to how we're going to pay for anything. So obviously, with the pound at the minute, it is an utter coin flip as to whether or not we're going to go long or short with the pound on the 17th of November. My feelings are we should be looking for shorts on it, because I don't think it really matters what they do with the monetary policy moving forward. Whatever they put in place is not going to be easy for the pounds to get out of. They're still going to have problems. We're going to go into a recession deeper. We are in a recession at the moment. So I think basically it's a case of waiting for that to happen. What I'm worried about with the pound is when the rate announcement comes out, we get some short-term strength. I'd rather sell that short-term strength than get into a position ahead of that. So the only thing I've got on at the moment is the pound US dollar. So for now, up until the 17th of November, which is only next week, where are we now? The 9th. Yeah, so it's next Friday, isn't it? Is that when we're getting it? Thursday next week. So Thursday next week, we've got our budget. Why is it not in there? It's probably because they still haven't confirmed it's definitely happening, but it should do. So until next Thursday, you're going to be range bound on this. The problem you're going to have is if you get into something you can't get out of it by next Thursday and it goes against you, you're going to be in a bit of trouble. So selling the highs, buying the lows, basically, if you can get any entries. But all of these pounds, really, I'd kind of leave them alone until we've got that confirmation of which way we think the pound is going to go. It's weak. It's been weak. You know, most of it is weak, the pound. It's having its odd day where it has a rally like we had. You know, we've had this recent rally. But overall, it's weak. And it's just come back to basically like pre-Liz Truss levels, isn't it, there? So so I'm short pound US, but this is more of a US dollar long position than a pound short. However, my bias is like that, so I don't mind this short being on. I get the feeling I'm going to be out of this tomorrow anyway, but if I'm not out of this tomorrow, I might be in a bit of trouble next week. So we will see what happens. But yeah, like it short at the minute. Pound US, that's the only one I really like short. Pound CAD is probably another good one to get into as well as a short. We're probably going to get continuation strength on the Canadian dollar. MK, how long do you think you're going to hold the trades? I have no idea. I'll hold them until I get out of them. You haven't watched the Boocamp, have you? Market goes up, market goes down, it goes through time. I have no idea. I have no idea when these are going to get anywhere near where I want them to be. I can't tell you. So I'll get out when I get out. I can't tell you when I'll get out because I'm not in control of that. The market is. New Zealand dollar CAD coming down nicely. So all the New Zealanders were having a big sell-off this morning. So again, tricky directional bias on the New Zealand dollar. We've obviously had all this strength, which is great. The New Zealand dollar is doing okay on inflation. Interest rates okay, not quite as good as they wanted them to be, but they have put interest rates up by a decent amount, which will get on top of inflation. So potentially continuation strength. However, not going to be as strong as the CAD in the US if we get decent inflation figures for US dollar. So you can see they're selling off into it this morning. We got a lot of weakness coming through. So we've had this big, strong push on the New Zealand dollar on everything. And it's been very orderly on the way up. So there is quite a possibility that we're just going to accumulate and then go into a sell cycle. How far that sell cycle will go and whether or not we get trend change starting will depend on obviously what happens with rates and things moving forward. But for now, I'd be looking for short opportunities on everything New Zealand dollar, especially against things like the US and the yen, which is why I'm short on this one at the minute. But there's not really much happening at the moment. As I say, like everything else, we're a little bit sideways at the minute. So any RSI extensions to the upside or the downside potentially are entries, especially on smaller time frames. But you see it's not really giving any entry signals at all at the minute, because we've just gone sideways out of the rally. So, but typically after a bull cycle and accumulation, you get a better cycle starting. So I'm more short than long at the moment on it. But you know, this is the beauty of precision trading, isn't it? If you get the bias wrong, you get the bias wrong. It doesn't matter too much. And this is why people get chopped to pieces all the time, isn't it? Well, traders get chopped to pieces. They go, oh, this is a short, and then they go short and they get stopped out, and they go, all right, I'll take the next long position. They get a little long entry in there, they get stopped out, and they go, oh, I need to go short again, and you just get chopped around because the stops chop you around, because that's what the market does. It moves up and down to grab liquidity. So, you know, it doesn't matter really which way you go with most of these New Zealand dollar pairs, as long as it's trading like it is, which is very nicely at the moment, up and down. You're going to get in and you're going to get out. You just need to wait and be patient and wait for extensions to get hit so that we know we've got a profit take move starting or potentially starting. So again, now we're moving down very nicely. So if we get anywhere down here, I'll be out. I'll be out before that. But yeah, shorts there, and US dollar obviously, yeah, up to you what you want to do with the US dollar. I'm long US dollar CAD at the moment. Nice 72 bounce, potentially starting. The only thing that worries me is if the CPI figures come out as negative tomorrow, I'm going to have to take a hit all the way down to there before we get our next support level potentially. There is an area there which is an accumulation which might hold up as well. But hopefully, yeah, we just get the push on this tomorrow. But overall longs on US dollar pairs at the minute, unless tomorrow's figures say otherwise. If tomorrow's figures say otherwise, then bleh. And obviously gold I've got on as well. I'm going to look at gold now because I've got one on. Oh look, I'm holding. I'm still in it. Still in the game. Got a nice reversal at this morning. Look at the wicks. Massive rejection this morning. They don't want to go higher, do they? Yesterday's high double top is a very, I mean, that's as targets go. I mean, I'm in it, obviously. But as targets go, doesn't get much bigger than that, does it? Double bubble. I'll be very surprised if they don't take that out. But you never know. All depends what happens with the US, but we'll see. But yeah, gold, obviously, I'll be looking for shorts, which is why I'm short. But who knows? Seymour wants it to go up. I want it to go down. One will be right, one will be wrong. Doesn't matter. Someone's got to win, someone's got to lose. Every time that button's pressed, somebody loses. Have you got a stop loss on this, Seymour? Just out of interest. I've just read your name. Very good. Are you a Simpsons fan? Seymour Butts. If you're position trading it long, I'd be a little bit worried. If you've not got a stop on it, obviously scaling down here, one or two things is going to happen, isn't it? We're either going to hold, we're going to push, accumulate, push, in which case obviously that would be the target, or we're going to pull back into the accumulation, somewhere around there. So if you're in long for that, you've got a second add there. If that happens, one of the two is going to happen. So you're either going to just get your target straight away, or you've got an opportunity to scale in. But we will see. But at the moment, there's a lot of rejection. That was not interested there. A lot of sellers stepped in there and squashed those buyers. So I'd say the guys that started this move are in control at the minute. But we'll see. Obviously today there's a, there's a high probability as well that we're just going to go into a rotation today. And in which case we'll probably stay somewhere between yesterday's high and the Asian lows. We'll just sit up here and wait for whatever's going to happen tomorrow to happen. The CPI. We've got Weller speaking early in the morning as well. Where's that? In Brisbane. We've got Swiss franc talking head as well. And then we've got Macklem and FOMC speakers in the evening. So busy day tomorrow. Very busy. Well, I've not managed to take anything on futures today. We did get the break. There we go. So we got the flush. The opening range break worked beautifully this morning. So I would look at 1356 as a potential bounce point on the DAX. So again, rotation. If we're going to rotate, probably within that range somewhere. But I'm hoping we just flush. We get a really strong US dollar move into CPI. We'll see what happens. Right, that's all I've got. Anybody got anything else they want to discuss or look at? Or anybody got any drawdown they're heavily in they want to look at? Need to get some futures on. I've got to trade. I'm going to trade. I'm going to wait until this afternoon. I'm not going to muck about this. If you look at the 15-minute chart on the US indices, it's all very sideways this morning. So obviously with DAX, we've done a downside break on the US indices. We are not. Just completely sideways this morning. Might actually take a long. Actually, that's a 3-to-1 range long. I think I might take that, Where's the range high? Stack. 111.50. There we go. $700 long for the morning. See how that plays out. So basically just playing long there, stop, TP. See if we just get a rotation in Globex and don't go anywhere. Not what else I didn't do this morning. Bit crap. Have you looked at prop fund your FX? Too much sideways for flags. I don't know what were you talking about, Seymour? There. What were you talking about? Which pair? Can I look at EJ? Yeah, I'll have a look at that prop firm in a sec. EJ. So Euro Yen, everything Yen, I'm short. So looking for Yen strength. So we've got obviously the interventions, as you can see, are have a big impact when they happen. And the US dollar yen is holding, and the US dollar yen is the main focal point for Japan because most of their exports are to the US. So they want to make sure that the yen's got decent weight against the US dollar. So when we get up to that 150 level again on the US dollar, there'll be probably another intervention. So my theories are at the moment, I just want to be shorting anything that looks good. So anything that pushes hard, I'm happy to take a short position on it, because either it's going to get extended and profit taken, I'm going to make money, or Japan are going to intervene, I'm going to make money, or the last intervention is going to cause people to start buying the yen, which means I'm going to make money. So I just want to be short everything against the yen, because I feel that we've got to the point now with the yen that it is just not going to put up with it anymore. So I'll be looking for short opportunities basically anywhere on it. But at the moment, obviously, since that intervention happened, we are basically inside range bound. So until it breaks out of that intervention there is no directional bias on it. So do what you like with it. But if it's going to continue to do that, your best bet is to drop down to lower time frames and take extensions to the upside. Sure. So wait for reversal alerts short M15 or M5 and take those. Too much sideways, 4 flags on gold. Yeah, it's difficult. I mean, it's difficult. This is just an accumulation at the minute. They're still in an accumulation. But it could go either way. You know, no, this is the thing. Your breakout is going to work, I imagine, after a move like that. So if we break out to the upside, and we don't immediately close back down, if that happens, then I would definitely short it. But if we are going to break out to the upside and it holds, we're probably off. And if we break out to the downside today, I think we're coming back down. Whether we get down to test that or not, I don't know. But you know, this is where things like your fib come in. Yeah, I mean, if you want to look for a TP, your fib is very useful for a TP. We know shallow, medium, and deep pullbacks regularly happen. A deep pullback is going to be down to resistance, so that would be a beautiful long if you've got a long bias on it. But you know, look at these when we get down to this level. Yeah, set an alert on it. You know, just stick a little alert there. Don't know if you saw me do that. It was off the screen, wasn't it? Let me delete that. So you know, stick an alert there. Yeah, so I've got an alert there now. So when it gets down to there, I will have a look at my profit and I'll decide whether or not I want to take it. And that decision will basically be based on, have I got anything banked so far today and how's my P&L looking? And see what happens. But it's going to go one way or the other from there, definitely. Fund your FX. Have I heard of these? No, I don't think I have. Trader interview? We invite you for a phone interview to find out more about your experience. What? Start trading with a live account straight away. You'll be paid 50% of your earnings directly after you hit a 10% profit. if you follow the rules. Well, what are the rules? In case your application is accepted by a team, there is one setup fee according to the selected plan: starter, standard, or professional. Fee covers the setup of the account, which costs nothing; license fees, which cost nothing; administration costs, which is automated, shouldn't cost anything; and our risk management and analytics software, which is pretty much free. Might be 50 quid a month, if that. Refundable after your 5th profit split. I'm sorry, I'm really, you might tell I'm very skeptical about prop firms now. So many of these starting every day. 50-50 profit split, account scaling, profitability. What's the rules then? Right, maximum trading size. Maximum lot size of 0.1 per $2,000. Okay. So you can trade a 0.75 in the indices, 0.5 in Forex. That's okay. All right. If you hit or exceed the maximum trading size at any time, your account will be disabled. All right. So there's no automation of this. So you've got to be careful with these. You need to read these rules. At CTI, for example, CTI have a maximum as well. But with CTI, if you go 0.4 long and then you accidentally double tap the button and go 0.8 long, CTI will reject the second order. These guys won't. If you double tap fat finger the button, you're out. You have to pay them again. By the looks of things. Maximum drawdown, 10% of the balance. That's good. Realized and unrealized losses. So it's drawdown, open drawdown. That's fine. Stop loss. Every time you place an order in the market, you must use a valid stop. Stop should be placed within 30 minutes of the trade. That's fine. If the trader closes the position within 30 minutes, there is no stop loss required. That's fine. So the only thing you can trip up on with this, by the looks of things, is fat fingering the lots. Any breach of the drawdown limits, you need to reset your account. Resets. Basically, you pay again with a slight discount by the looks of things. So it's a 10% target, basically, with a 10% drawdown. So yeah, it looks okay, doesn't it? But they're only tiny accounts. And you've got to go through a phone call with them. Doesn't say how big the accounts are, does it? There we go. 6, 15 or 30k. £577 for a 30k account. And only half profit split. That's really expensive. But quite loose on the rules, isn't it? So, and a 50%, I mean, that's the thing that kills me. Why take a 50%? I can get 80 to 90% everywhere else. Why would I take a 50% profit split? And I'm just going to get into an argument with them over the phone, probably. So other individuals are charging to pass your challenge for you, maybe. Yeah, I don't know why they'd interview you. It's weird, isn't it? But saying that, they got a lot of reviews on Trustpilot. So this is BS. So I made $2,200 on the 30k account. Since there is no dashboard, no community, and you'll not get notified about anything via email, and I almost hit the profit target, I wanted to ask if everything was okay. They tell me I breached a rule of volume on gold. There you go. So this is the one that I was saying, that rule on volume. What he means is lot size. You've got to be very careful with that. But I mean, he broke a rule, and fair enough. Never had a problem with paying. I pay my bills and they pay me on time. I'm never interested in positive reviews. I'm just interested in the negatives, because the negatives kind of tell you what's wrong with it, if there is any. So, and they seem pretty good, don't they? Let's look at the 1 stars. Let's look at the moaners. Hands tied up trade in terms are good, but you can't make money as they limit the lots. So this firm, I would say, if you're not a scalper, the silly rule that I broke, I followed the 10% rule with proper risk management. All they care about is people buying their stupid resets. Well, yeah, that's the way they make money. They're not even based in the UK. These reviews look fake, mostly the same part of the world. Why have these all been removed? So rules, I did keep their rules so that I can know I'm trading correctly. I start trading again. Please check if I followed your other rule. What? Stay away from this company. Hit the profit target 10%. I've been told that I have violated the lot size restriction. Yeah, this is the thing that's going to catch you all out, catch everybody out on it, is a lot size restriction. If they've got no, like with my my futures account, for example, yeah, I've got a 12 contract or 120 micro contract limit. If I try and place 13 contracts or 13 contracts long, it will reject the order. Same with CTI. CTI will reject the order if you try and overtrade from a lot size. These guys haven't got any restrictions in place. So that, I mean, these people that are moaning about that, you didn't read the rule, did you? You just haven't read the rules, basically. So these guys that are moaning are made for gamblers. Well, it's not made for gamblers, is it? Because they're not letting you do a lot of size. So it's a swing trading, I would say. It's a swing trading platform. So if you're looking to take small position sizes like we do, great. It's probably not bad, is it? You've got 10% open drawdown. So that actually might not be a bad, because there's no daily drawdown. That might not be a bad firm to look at for position trading. The difficulty you're going to have is if you've got max lots on, whatever the max lot is, and you need to add another position, you can't. So you're going to have to close out. So what you'd have to do is, if you're position trading with them, and that was your maximum lots, and you needed to take another one, you'd have to close one of these to be able to enter your next position. So do drawdown control along the way, which may or may not. I mean, that does actually work, because I've tested that with the EA, and that does actually work. The profit curve is obviously less like that and more like that, which is fine. Depends whether you like a profit curve like that, which is what I like. But yeah, but that's the pain, isn't it? A lot of restrictions on lot sizing for 50%. But I don't know. Try them out. If this was on any other platform but Trust Index, I would probably go, wow, they look really good. It's not Trustpilot, is it? It's Trust Index. It's a Trustpilot ripoff. I don't know if they're any good or not. I honestly can't say. What's this? Trustpilot. 46 pieces. So they have got Trustpilot reviews. Very bad interview. I had an interview with a person. He wasn't care so much his duty. He used stereotype sales techniques and made me feel that he was bored to talk with me. Then he told me that 2 minutes past his time, that he mentioned that he needed to leave. Actually, I was decided to work. Oh God, it's really bad English, isn't it? With the company, but because of his attitude, I changed my mind. By the way, he told me that if you don't like our conditions, you may choose another firm. Yeah, obviously not a good salesperson you got there. Poor support. Terms are good. They make trades loss, but their restriction on the lot make the trades loss only. What? You really have to be careful with reviews, don't you? But it seems to me that most people are getting caught out by the lot size. So if you are keeping on top of that, and don't forget, that is all logged. Every trade is logged, isn't it? In here, yeah. Your lot size is here. Yeah. So if ever they say you broke a rule, you can look at this and you can easily show them this and go, no, I didn't. So if ever they try and use that, you can tell them to rack off. But yeah, I don't know. Try it. The only trouble is at 50%. I'd be mortified to get a 10k profit and only get 5k of it. But that's just because I'm used to 80 to 90% payouts, and that's just the norm, isn't it, in the industry? So anyway, if you try them out, I'll be interested to know how you get on. Also, the other advantage of this is there is no time limit, is there? So basically, all you've got to do is make 10k, and they give you 5k. So basically, their business model is take as many evaluations as we can, and pay guys out 5k. We can't pay them too much more than that because we're limiting their lot size. Therefore, they can't take too much risk. Therefore, they can't take too much money. So I can't risk 10% of my account on a little stop like that with a TP up there because I'll exceed the lot limit. So their business model seems pretty sound, but I reckon they're pretty young. Let's check them out, shall we? What do they say about themselves? Not a lot. But let's have a look at when they were when they started. December 20. So they've only been around for a couple of years, for a year and a bit. That's when the domain was registered. Obviously, it takes time to build a website and stuff. So I would say, where are we now? December 22, aren't we? So they've been around for a year. Well, that's usually when. Right. Okay. Whenever you're doing any checks like this, I don't know if you do this. I do this all the time with prop firms and with brokers as well. This is a really good thing to do with your broker. If you come across a new broker that looks amazing, just check out when they were registered and all this sort of stuff, when the domain was bought. This here, the updated on, this tells you a lot of the time when the website was launched. So what happens with web development usually is you basically register a domain name, and then it's all built on a development server. When the site is launched, you change the DNS. Yeah. So the last DNS change is usually the website launch date. In this case, March 22. So I would say this company's probably only been around for 8 or 9 months. So what you can do for due diligence is go and have a look at their reviews and see when the reviews started. If you can. Oh, it's one of those where you can't go back too far in time. But you want to look at the review dates. If all the reviews, look, these are all October. All of these reviews are October. Now we're back into September. So there's a hell of a lot of reviews, isn't there, coming in a very, very short period of time. Got to be so careful with reviews. So many fake reviews out there. You can go onto Fiverr. If you go on a Fiverr, you can get people to, whoa, I've just stopped out. Well, I'm not stopped out yet. Jesus Christ. Someone just shorted the market. Big style. Everything just lit up like a Christmas tree on the futures market. Big short order just gone in. I was just going to say, looks like I'm stopped out. I'm not actually stopped out, but I'm not far away from being stopped out on that long. You can go to Fiverr and basically pay people to just go and leave reviews. Because companies like this, as opposed to Trustpilot, companies like this aren't vetted. You know, they don't vet every review, so just be a bit careful. But all you can do is try them out, unfortunately, with these prop firms, and I've tried lots of them, so but I don't know that one. So yeah, we just had a big dump, a big candle on the US indices. But chart's not updated. We're down here. Oh, come on, Robo, for God's sake. I'm having so much trouble with this Robo platform at the minute. There we go. So we had a big dump there. I didn't get stopped out in that position. I'm still in it. Oh, look at that. There's my stop. Missed me by 2 ticks. I think I am going to get stopped out in it, though, by the looks of things. So that pop basically was this low breaking. Basically, that all those massive orders I just showed you. That was the sellers breaking support. So we'll see whether or not the buyers now step in and push them back up. If they do, all of those sellers that just stepped in there are going to puke their orders, and we're going to get a pop. So it's going to go one way or the other from here. And if we're going to flush down, I would say we're probably going to come and test yesterday's low. There's a load of sell orders coming in, so I'm definitely stopped out on that order. Will be in a minute. Gone. Yeah, so wow, loads of sell orders. There's a massive amount of selling coming in. Look. So short in indices this morning, which is lovely because I'm short the DAX. So if the US indices are going to push down, DAX will likely get dragged along with it. So hopefully we're going to get a down day today, which means we will hopefully challenge these lows, which is good. So half my DD's gone this morning so far. I was up to 8% this morning. It was nice. So I'm down to 4 and a bit now. Gold is working as well. So if we can break the Asian lows on gold, I will add on a break of the Asian low, and then I'm going to add one more, and then obviously we'll see what happens when we get down to the top of this propulsion gap, and to see whether or not we find some support in here. I got your trade manager today. I wonder what the number 5 on profit target alarm means by default. This one. So that is the individual trade profit. So this. So any one of these hits £5, dollar, whatever your currency is in your account, that will trigger. So if you, sorry, bear me 1 second. I just got to get delivery. My wife's gone out. Sorry about that. Had to be the most complicated delivery in the world, didn't it? Can I take something in for our neighbour 2 doors down? Yeah, I can. I'm just right in the middle of something at the moment, mate. Foreign, obviously, and he just asks me lots and lots of questions. And like, I've really got to go. I'm out of breath now. I just went upstairs. Right. Sorry. Yeah. So this is basically, as I said, this. So, like I was saying earlier, if you want to be alerted, oh my God, sorry, it's just on the doorbell again. Right. He's rung the doorbell and taken a photo of the front door. Delivery drivers. Nothing against delivery drivers. Just some of them. So yeah, if you wanted to be alerted, basically, when an individual position gets into 0.5% profit or something or whatever, you just input that amount there. So if you're running a 10k account, £50 is 0.5% profit, isn't it? So you just set that to 50 and it will alert you when you get 50. Yeah, that makes sense. And then obviously you need to turn that alert on. Yeah. But I don't use alerts. So I have it all turned off, because otherwise it pings at me all the time. And it's really useful if you're not paying attention. I'm watching this all day long, so I just don't need alerts. Feedback after 5th withdrawal though. Looks terrible. Much better options out there. Yeah. You get your feedback after your 5th withdrawal. Right. So let's think about that. You have got to make 50k profit or 50% profit on the account. You've got to increase the account by 50% and then they'll give you back your initial fee. I guarantee you no one will ever make that, because no one is going to survive long enough to make 50% profit on an account where you're limited by lot size. It's just not going to happen, is it? Forget your fee. I forget all my fees. I pay my fees and I get them back sometimes, and sometimes I don't. I don't take the fees into the account. It's nice to get them back, but Audacity Capital are terrible. Don't go Audacity Capital. Damn it. If you want Forex, go My Forex Funds or E8. They are by far the best. Like, not just by far, by a million miles the best. From terms, from payouts, from speed, everything. They're just better. Platforms are better. Backends are better. It's all better. And if you want to go futures, when I get funded with these people with the minute, them or futures is a bit difficult at the moment. Just trying to think futures wise. What's the one I just said? Oh, Take Profit Trader. Sorry, yeah, Take Profit Trader. These guys seem to be pretty much the best out there at the minute, and they're going to do Forex soon. So, but all the others, you just take so long to get paid. Same with Audacity, it just takes ages. Looks like pound is coming down. Yep, certainly is. I was on the verge of taking another position up there yesterday. I didn't, but. Yeah, My Forex Funds an 8 cap. 8 cap. Not 8 cap, E8, sorry. Don't use again, don't use 8cap. 8cap are the worst broker ever. E8 funding and my Forex funds. So if you're going to use a prop firm, my Forex funds and E8 for Forex. And at the moment, I haven't got a funded account with them yet. I'm doing evaluation with them at the moment, but assuming I do get evaluated. These guys have got no withdrawal limit. So this is a big positive for they're the first ones in the futures market to do it. All the others, you have to take a while to get paid with them, unfortunately. But choose who you want. I mean, I don't have anything against Audacity Capital, for example. I just think, you know, the organization and the back end, the cost and everything is better here. And I can't find any advantage to any other firm above my Forex funds. E8 are a little bit more expensive, but there are no time limits. So I can get funded in 24 hours. So these guys are great for fast funding. The problem with that, obviously, is it causes you to overtrade. You know, I've passed this evaluation in a day, but by over leveraging. But, you know, if I take a long and it works, if I take a 2% long and it works, and I add 2% to it, I've only got to get to there and I'm funded. You know, and you've got a 50-50 shot of taking a trade and it working out in your direction without hitting your stop, haven't you? So go for it. Go long with 5% risk. You got 50-50 shot of passing evaluation. But then don't trade like that. Obviously, when you get the account, the key is when you get the account, go back to trading properly. And this is why I like E8, because it gives me the opportunity to get funded fast. When I blow an account, I can get back in next day, same day. Although it does cost more because I blow more accounts. But then again, that's the game, isn't it? Costs and profits. It's cost of doing business. Doing this, every time you pay this, yeah, it's a cost of doing business or whatever you pay. Yeah. So if I pay that 10 times, it cost me $5,800. Yeah. All I've got to do is pass one evaluation, trade it up to $5,800 or more, and I'm a profitable trader. Done. That's the math. That's all you do with props. And hope you can keep it as long as you can. I've got 2 withdrawals. I'm on my 3rd withdrawal on my Forex funds now, which is great. But I will blow it. I definitely will blow it at some point. Because I will. That's what happens, isn't it? You blow accounts. Can't keep them forever. Really big drops going on at the moment. Got some nice profit building. I've just taken some profit on something. What's that? Aussie New Zealand just closed out 1.6. So that was that position there. Should I close some more of that? I'm tempted. We're up to 125 ADR now, look. Might close a little bit more of this out. $36, it's not worth it. What was it? Too near profit there. So what I'm going to do, I'm just going to close one more Aussie New Zealand. And sorry, one sec. Just doing some live drawdown controls. It's probably good to see. 1%. So $102. So I'm going to take partial on that. So I've just closed out. Let me just so you can see what I'm doing. So I've just closed out 2 trades in profit and 1 in a loss. God, that's an old one, look, blimey. So that's the very first position. So I've just reduced that down again, taken a 0.2 off of that, taken that one and that one off. Yeah, so 2 profits, 1 loss, totaling 0.7%. So I was 1.23 yesterday. Now I'm down to 0.7 with all that in the bank. And US dollar. We're at support at the moment. So I'm going to take one of those off. Reduce one. So it's $43. Pound US dollar. Actually, let's find my worst pound US dollar. That one. What did I make on that? 43. It's going to take a 0.1 on that one. So again, more profit there. So just reduce that one down again to a 0.3. That was a 0.8 yesterday. Reduce it to a 0.4, just reduce it down to a 0.3 using that profit. Average is pretty much where it was before. So if we continue to push down and get an ADR today, that's fine. So again, 1% in the bank. Sitting on 4% drawdown. Gold. Gold I don't trust as far as I can throw it. So I'm going to reduce my risk on this gold dramatically. If we're going to take yesterday's high out, I think we're going to accumulate and run. So I may as well just get out above this high. If it's wrong, I'll just take that. If it's right, obviously that's where I'm targeting. So I'm just going to leave that on for the minute. New Zealand dollar yen. So this is New Zealand dollar weakness. No news, is there? We'll bank that. Might just take that as well, you know, just take that New Zealand dollar yen off. So flat New Zealand dollar yen. Look at the execution time. I've just executed a close on that. Didn't work. So New Zealand dollar yen out, so 1.34%, sitting in 4.28 still. I'm going to let the rest run for the minute. Nice little morning. Euro moving as well, is it? Yeah, started to go. We've got some US dollar strength coming through, which means the indices are going to come down, which is going to help my DAX a lot as well. So I'm not sure whether this is going to be sustained. The thing we might find, the reason I'm taking profit is because what I'm thinking might happen today is we're going to move and entice some positions in, and then we're just going to do that. I'm not sure we're going to get a massive strong move ahead of CPI. We might do though, because obviously they may be repositioning ahead of CPI, which means these moves will potentially continue, which is fine. If they continue, I'm just going to go flat, aren't I, basically? But if they don't continue, I want to take profit along the way, because it's too much to leave on the table, really. I've got another 0.5% I can take on the pound US. Pound Swiss has just hit ADR 125. We're coming down towards support on that one. Again, ADR 125, potentially get bounced from there. So a lot of these got decent profit on the table. So that position there is that one, and that position there is that one. That is that. So what I could do if I wanted to is close that and close that. Bank's about 0.25%. So I'd get rid of that position, get rid of that position, bank 0.25%. And then I've got these two on here, which will bring my average to somewhere like there. So I'm still well within an ADR, but I'm also going to make sure I guarantee another 0.25% now, just in case. What's worrying me about the pound US at the moment is this. So I'm going to bank that. And I'm going to close that one. That puts another 0.25% in the bank. And you see my average hasn't moved, but I banked 0.25%. So using one to pay the other all the time. That's basically what drawdown control is. So when you were asking this morning about drawdown control, that's it. Constantly taking this, putting it in there, and using it to get rid of that. Don't often do it live on air because it's normally the moves are happening other times, aren't they? So we're just about to get the reverse alert on the hour as well, if that holds there. So if this is going to flush today, we've got a big move in the propulsion gap. So if we get an ADR 125 or something, in fact, I'm going to put that in the market now. So I'm going to look at this high here. So I'll take those three positions off there. That'll bank me another 0.25%, 0.5% or something. And that gets me flat on the pound US ahead of CPI, which would be lovely because that reduces my liability down on that. Gold is almost tantalizingly close. I just want to take that off. I hate gold so much. I just want to take it off. I don't want to be in it. It's horrible, but it's so tempting. Look how far it's got to go. So it's just gathered me into a third position. I put a trailing stop on these as well. I forgot yesterday. I put a trailing stop on these of 625, which basically was kind of what I could see was the average sort of move yesterday was about 625 when we were pulling back. So I've got trailers on these. So as these go into profit, they are going to trail by 625. The reason I like trailing gold when I used to trade it was because it's such a fast mover. If we flush here, you don't get that movement on gold. You get that stupid movement, don't you? A lot of the time you get, if it's going to move, it's going to go nuts and it's just going to go flying. So I'll put trailers on everything. So all my risk is going to be mitigated as we come down anyway, if it pushes down. But you know what? I'm just going to measure what this is going to be profit wise. There. So that's 0.75%, 1.25, about 1.5. No point. Take it. I'm not going to put that one on. So I'm TPing there. I'm going to cancel that. I'm going to TP there. It's about 1.5%, roughly. I'm also going to need to put a stop on that. Big flush just gone in again on the indices. We've had just a load of sell orders just come in on the NASDAQ and the ES. So the US dollar's strong this morning. Indices are getting pummeled. So TPing there. Not for any reason other than it's gold and I hate it. I'm just tempted to hit the button now. I'll just take this. Just take it. I just don't like it. I hate being in it. It hurts me. But I'm not getting greedy with it, basically. You know, I've got every faith if this is going to gap fill, it's going to gap fill at least down to here. But I'm not, I can't bear to watch it kill me again. If it was any other instrument, I wouldn't be bothered, but it's gold and I don't like it. EB still 2 phases. E8 still 2 phases. Yeah, E8 is still 2 phases. So same as my Forex funds. Yeah. But there's no time limit on E8. That's the beauty of E8. Yeah. So when you pass a phase, it takes around about half an hour to 45 minutes before they send you the login credentials for phase 2. And then when you pass phase 2, it's about 45 minutes to an hour before you get your funded account. So I put it in the Telegram group, didn't I? 2 weeks ago, I passed, was it last week? Can't remember. Last week or the week before, I did that in London. I passed that in New York and I traded. It was FOMC, wasn't it? What was it? There was a news event. Anyway, I passed that in the morning. I passed that in the afternoon, and then I traded the news event with a funded account. Made about $1,500. It says minimum calendar days 1. What that actually means is nothing. It's actually 0. Can we have a look at the dollar index? I haven't got the dollar index. I can show you the dollar index though. It's basically Euro US dollar upside down. That's the dollar index. Just flip it on its head. This is 100% inversion of the US dollar index. So how do you show your average on the chart indicator? Yeah. So this is the ME break even. It's called the ME break even line. It literally just draws a line where your break even is. It's in the, if you go into the files section in the Telegram group and just search for break even, you'll find it. It's in there. It's also on the website. If you go to the website, I don't know if you've got the templates and all that sort of stuff, but if you go to other indicators and template, you can download a zip file and it's got everything in there. That one, break even. As Diarman's just said. Diarman's just answered my question. I can have a look on TradingView, I suppose. I don't use it though. View. Charts. Chart plus. Oh, there you go. US dollar index. There's the US dollar index. So as you can see, it's just the upside down version of that. Maybe bouncing off support, yeah. And Euro US dollar is bouncing off resistance. So if you ever want to know what's going on with the US dollar index, just it's the opposite of this. Where are you watching those large orders going on? So this is on a platform called Jigsaw. Whoops. So this is Jigsaw, which is a futures platform, which does all sorts of stuff. Like heat mapping and things like that. But this area over here is the order flow. Basically, it's the orders actually entering the market, and it's called a reconstructed tape, and it basically is it's set up. I have it set up to show large orders. So in each instrument, basically, you'll have different order values going in. So you can see there's a large sell order gone in. There's a large sell order there. That white one, that is a new large sell order at the low of the day in the NASDAQ. So that's this order here, 105. That is accumulation of that altogether, somewhere around there. So yeah. So, but this just shows you the orders coming in. It's a little bit like tick strike. So if you know tick strike, yeah, it is a paid for. It's paid for. But this shows you the orders. So the beauty of Jigsaw is you can see the orders. Yeah, so I can see where the orders are in the market. So these are large orders sitting on the NASDAQ. And these are large orders being placed, these bubbles. So I know there's a large order sitting here waiting to be executed, or large-ish order. And I can see there's large-ish orders, and there's a very large order sitting there because it's a different color. And you can format this. You can make it stronger or weaker. The interval width. Depth tuner, that's the one. I can't remember. Oh, there you go. There you go. Right. So you can see this is all the orders in the market, basically, which are all these pending orders here. So you're looking at basically where everybody's orders are sitting in the market. And every now and again, you'll come across a whacking great block of orders. Yeah, so there's a big block of orders sitting up there. So when price trades up into that area, one of two things is going to happen. Either that is somebody's target and they're going to exit their long position, which means they'll execute a load of sell orders, or it's somebody's limit order, meaning that when it gets up to there, they want to push the market short. Yeah, it's whether or not that massive block of orders can be fulfilled by buyers and then we run out of buyers and we shoot down, or whether all of those orders will get absorbed by buyers and we'll fly through it. If you use this in conjunction with nodes in the volume profile, it gives you a good idea where the market is headed and likely to bounce from. But this is on a tick level, obviously. So there's a large block of orders there, there's a large block of orders there, there's a big block of orders there, there's a big block of orders there. That is VWAP, the volume weighted average price. A lot of the times price bounces from VWAP. People place orders at VWAP because it is a value area. It's the average price for today. Think of it like a moving average bounce, VWAP bounce. Lots of limit orders sitting there, people anticipating a bounce off of VWAP. Lots of orders executed at that level, lots of orders. So it's just, that's basically what it's showing you. There's lots of different things it can do, obviously. but yeah. So, but that's where I see the orders coming in. I see who's, and this is institutions basically. So these are institutional orders. If you're dumping 40 contracts in the market, you're not you and me. Yeah, you are a larger player. When you see hundreds coming in, or you see big block orders coming in, like I showed you, where it lights up red, solid, 300, 400, 500, 600 orders being executed. That's a large order being executed by an institution. If those guys have just gone short, there's a high probability that it's coming down, because if somebody's dumped 1,000 contracts short in the market, it's coming down, because those guys have got the power to move the market. Either that, or it's someone going long, puking, and then the market flushes. Either way, when you see a big volume coming through, you usually get a continuation. So I use that. And this is why I said, looks like we're going to get a breakout. Yeah. Because we had this candle here. Probably can't see this because this is a massive 42-inch monitor. This candle here was a breakout of that level. Yeah. So when I said, whoa, what was that? That was a massive bunch of orders breaking that level. Look what happened afterwards. And that's where I got stopped out of my order, wasn't it? Because I was looking for the long bounce, because there was a load of orders sitting here, limit orders. So what it does, what heat mapping does for you, or for me, and for most traders, is it gives you a reason to trade. So the problem with trading is over trading. Yeah. So I'm thinking, oh, shall I just take a long now? Oh, it looks like it's going up. I'm going to hit the long button. What it does is it says, right, there's no point in getting into a trade unless it's an area of potential movement. So you've got a much higher probability of your trade playing out if you take it where everybody else is taking a trade. Because if you take a trade right now, you're on your own. If you take a trade here, there's a hell of a lot of other people doing the same thing. Crowd mentality. Volume. You've got people behind you. If you sell here, if I go place a limit order there, yeah? Right? I am now part of this bunch of guys wanting to go short. If there's more of us than there is buyers, we're going to win. We don't know. But there's much more high probability of it doing something violent from that area than there is of it doing something violent from here, because there's no participants here. Is there? There's nobody in the market here. It's just chop. There's a lot of people there, a lot of people there, and a lot of people there. If you look at those levels on a chart, so that one there, let's call that 11069. Just turn drawing tools off. Oh, that's wrong chart. Sorry. 11069. Yeah. So look at where those orders are. Yeah. So this heat map area here that I've put my order at is 11069, which is here. Why is that there? The resistance break bounce. Yeah. So I am sitting here at the moment going, market's broken short. Next time it comes up, if it tests that resistance with all these guys, we're going to jump in and see if we can get a continuation move. Yeah. This is what heat mapping's for. It's there to tell you where the rest of the crowd are, basically, and you can fine tune it to different. I mean, that's why I normally have it on something like that, because it's just really obvious, and you'll find that level as well. So if you look at 11090, yeah, 11090 is there. Yeah, so people are selling that level and that level. obvious why, isn't it? Yeah, so we've got orders sitting there. We've got orders sitting up at 11,090. But this is all we do. This is exactly the same as we do on a chart, isn't it? Support resistance bounces. We're doing exactly the same thing. So support and resistance. We're playing support and resistance. Except I can see the support and resistance. I can see the orders. This is the difference. I can see the orders sitting in the market waiting. The big difference will be is you see a batch of orders here, right? We'll see what happens. If we hit that level, these orders will either get pulled or executed. And we'll see that here. You will see those orders either execute or price will fly through there and they won't get executed. And that's what's called spoofing. So institutions place large order blocks in the market, which entices people to come up there, get in short, as I'm doing here. And what they do is just as you get there, they pull all their short orders out the market and then it flushes through because the people that sold get out of their positions and we get a flurry of buyers. And then we move up to the next order block. So, you know, and stick a sell order up there. Stick a sell order up there. Yeah, a VWAP. So if you wanted to position trade, yeah, a short. So let's say, for example, we're going to assume that we're going to go short today and we want to get in on the action. We can enter there. If that doesn't work, we can enter there. If that doesn't work, we can enter at VWAP. And if we are going to go short for the day, and I have a stop up there, yeah. If we were to get to VWAP and then go short for the day, we've got 15 contracts short, which is, I mean, if we push lower the day, you're looking at 2.5, 3, 4 grand. Yeah, but that order, there's a block of orders definitely sitting at that high at the moment. But, you know, you can't see this on a chart. And this is the beauty of heat mapping software is you can't see that on a chart. Yeah, you can. It's this wick here. That wick. That area there is the higher that wick. And this is why we get double tops. Because you can't see it, but I can see if we come and test that area, there's a load of limit orders sitting up there looking to trigger. You can jump on board with them if you want. And what I do is what's called front running. So I just front run the order by one pip, one tick. Because quite often you'll hit it and it'll flash fast, but you know, it might not hit it. And if we don't hit it, what will happen now is you'll see all this order here, yeah? What will happen now is if this pushes down now and we make a new low, this will vanish. Because what will happen is exactly the same as I will do, is everyone will pull their order and move it down. And we'll be then looking for a next bounce up and drop. So you can see the orders getting pulled as well. You see here, this was a block of orders. They've pulled it. They've pulled it. What they've probably done is they've pulled these orders and they've moved them up. Or they've moved them down into this block. Or they might have moved them up into this block. But you can see these are orders. Somebody had, I can replicate what they had. Somebody had a sell order there, that level, a sell order there, and a sell order there. So that was somebody's order in the market. And they keep putting it in the market, pulling it, putting it back, putting it, putting it back, pulling it. That would say to me that that is a bank spoof because they keep pulling the order. But this is an algo. This is more than likely an algo doing this. So what they're looking for is either that to work, or that to work. And if that doesn't work, they will be exiting the position there, which will be a buy order, and that buy order will drive the market up. We'll try it. Let's try the order. See what happens. There's that wick test. Yeah. There you go. See the orders come back in now. Look. That wick high at the moment is holding. But the backstop on this order from me personally would be here. So if that doesn't hold, I don't want to be in, because if that doesn't hold, whoever's shorting that is going to puke their order and it's going to fly up. So I want to be out. If they can't defend that area with these orders that have been sitting here waiting and getting added to, and this is the other beauty of it, it becomes a self-fulfilling prophecy. I've put these orders in here because I'm seeing others putting their orders in here. Yeah. This big block, there's a lot, everybody's seeing this and they're going, that looks like a good short area. So everyone else is putting their orders there as well. So for the buyers to get through that, it's hard work now because they've got to try and push through it. But think about, again, what I keep saying about propulsion gaps, right? What's that? A propulsion gap. They sold. If it pushes back up into a propulsion gap, what do we get? Sellers protecting their sale. What's that? Sellers protecting their sale. This is the actual orders in this propulsion gap designed to keep price low today. That's where we want to get on board, in the propulsion gap, assuming that the sellers are going to continue their move to the downside. Unless they get overpowered by buyers, in which case we'll see the buyers coming through on the tape. We'll see large orders coming through on the tape, indicating, uh-oh, trouble. We've got a lot of buyers coming in. These guys might make a run on it. We can see it happening over here. So all this combined is literally just doing exactly what we do on candlesticks. It's showing you support and resistance. So it's first order filled. So what's that? 11068. So this order here, 11068, is this order here. It's that resistance. Yeah. So this is that resistance. That's my final attempt at this short. So we're either going to do one of two things on this move down. We're going to do a 50% retracement roughly and break, or we're going to come and test that and break, or we're going to lose because the buyers are going to win out. That's my line in the sand to get out. $250 loss. It's actually going to be more than that because I'll actually have 15 contracts on when we get there. So that'll be about $500 to $700 loss. But the reward is going to be much, much bigger if it works. If it doesn't work, it doesn't work. But at least you get, you know, it's like having X-ray vision inside of this candlestick, inside of this market. But, you know, it doesn't always work. I'm a little bit over leveraged for this. I wouldn't normally go 5 contracts at each level. So I'm hoping this works, this demonstration. If this was a real account, I wouldn't be doing this, but it's an evaluation. So I'm not actually that bothered because if it does work out, I'm going to hit target very quickly today, which would be nice. What am I down today? Only $300. That's right. I've got $2,200 daily loss limit on the account. So that's my homework for the afternoon. Those pesky big fish with deep pockets. Yeah. If you want it, Seymour, go into, I'll get the link for you actually. It's all in the Telegram group, but I'll post it in the chat as well. There's a 10% discount there for Jigsaw if you want it. It all comes with training as well. So they will give you, there's 3 different levels of courses. The basic one is enough, to be honest. The basic course will teach you all about order flow, drills to do to practice order flow. And it will teach you all the stuff I've just covered, really, but in much more detail. It'll teach you what iceberg orders are, all that sort of stuff. But there are more advanced courses they do as well, but they're a lot more expensive. So the basic package comes with what I think is good enough training to learn futures order flow training and volume profile, all that sort of stuff. Not quite getting executed on this second order, but the second order has been pulled. Look, yeah, so that was a spoof order. So that order that I placed there was a spoof. You can see that it's been pulled. Yeah, and my other order up there has been pulled. It's gone. When I entered, there were orders at these levels. Look, there. Been pulled. So it's a spoof order. But we have got that's a proper order now coming in at that level, which just got gobbled up by buyers, as you can see. So I'm 10 contracts short. Loss is now 380. It'll be like 480, 500. $500 basically loss there, roughly, if the trade doesn't work. New Zealand dollar yen, nice profit. I'll have a look at that in a sec. So we are now testing the propulsion gap. Yeah, so this wick here and that wick there cause the propulsion gap. So this, where we are right now, is testing the low of the propulsion gap that caused the breakout. So anywhere in here is where I would expect, if the sellers are in control and remain in control today, anywhere in there is where I would expect to see some sell orders. So what I'm looking for is I'm looking for the reconstructed tape to show me some sellers coming into the market, and ideally some bulk orders. So these big red blocks appearing over there. That would tell me that we've got some sellers coming in. At the moment, all I'm seeing is buy orders. But those buy orders that are coming into the market here, more coming in now, they're not actually making any progress, are they? Which tells me that the sellers are absorbing all of that buying pressure. Because if they weren't, we'd be moving up. We're not, we're moving sideways. So that tells me that all these buyers aren't getting anywhere. If this pushes down, all these buyers are going to go, this ain't working. They're going to get out of their positions, which makes them what? A seller. When they become a seller, they add to the selling pressure, which drives price down. It's whether or not there's more buyers or sellers. We don't know. You never know until you get there. But we do know there's a lot of them there. Your link is invalid? I'll check that. Yes. No. Oh, that's because it's got the word discount on the end. Sorry, that's the link. It's because I've copied and pasted it. It should have had a space in it. I can't amend that. There you go. Let's just quickly have a look at Euro US dollars coming down. New Zealand dollar yen. I'm out. New Zealand dollar yen already, but that's coming down further. Gold. Oof. Gold's being a pain in the arse. This is why I don't like it. Don't like those wicks. Just don't like it. I don't like gold. Hate it. It just does my head in. It's just violent and horrible. It'll just go like, it'll suddenly go like that. Literally, you'll have a 5-minute candle that will do that, and then you'll have a little bit of that, and then you'll have a 5-minute candle, and I'm stopped out in 10 minutes after waiting all day for something to happen. In 10 minutes, it just kills you. And it's just such a violent beast. But yeah, it has broken the lows of Asia. So we'll see. So looking for some kind of pullback and drop, hopefully, on that one. Okay, so coming up to the third entry. What you want to look out for, right? So you see you've got loads of buyers coming in over here. What we don't want is this whacking great white bar to start turning grey like this is starting to. This second level is starting to turn grey. What this means is the sellers are pulling their orders, which means it might be a spoof order. So this could be, and the market is attracted to these like a magnet, as you can see. Yeah. This could well be a spoof order. We might see this vanish. So just as you get to it, the algos will be told if we trade at 67 or 68, pull all your orders. There you go. Orders might get pulled. If they get pulled, we'll just fly through that and they'll be stopped out. So, I mean, 15 short, got about 425 loss. And this will either hold or it won't. So we're not selling any signs at the moment of any selling activity at all. It's all buying. So we need to see some sellers start to come in now. If not, do that. So obviously what I did was scale in to that position on the back of other orders. A better strategy usually is wait until we get there. Just enter your initial position there and tiny little stop. That's right. So there's a big bubble just come in there. Okay, so there's some so large sell order entered in there. Which is obviously pull price down. So sellers are starting to step in. See if they can hold the level. I'm not seeing any massive selling activity coming in, so it's not looking great at the moment, but Amit, I'm waiting for the pullback to enter. Pullback on what? Primus. I usually market structure indicator. I got into the pullback on the 4-hour chart. I was in the trade for about a day and a half. So, but as you can see, it paid off nicely. All right. New Zealand dollar yen, that was, yeah. Yeah. That's a good one. Nice quick trade that. Looks like we're going to stop out on this one. So if this this level obviously looks like we've got nothing but big old buy orders still coming in there, so I don't hold up much hope for this one. But next level market will be attracted to, again, like propulsion gaps, market is attracted to large orders, liquidity. That's what it does. It hunts liquidity and finds it. That's where the liquidity is. So you could take flip long and trade it just up to there. So that'd be a quick scalp up into there. And then obviously see what happens with order flow as to whether or not we get sellers starting to step in up there. If we see a load of sell orders starting to step in there, that is probably going to be that bounce, which is where that liquidity is sitting. There you go, so I'm out of that. So likelihood is we're just going to grind up into that level. You see the speed of movement now. See that I just flicked up quickly there. More big orders starting to flood in. Yeah, because that's where everybody's stops were. Same place as mine, sitting behind the fish, the big fish. Anyway, so that's basically what it does. Obviously, that's, you know, like any trading. That trade I did didn't work. Trade the next one. But it stops you getting in now. It's like if you. But the other thing is you can do now. Obviously, this area we know we had a load of sellers at. If we push down from here and start to see a load of sell orders like we are now, look, coming in, potentially this is still the bounce point. It's just the stop was too tight on the bounce. So this could well just come down now and retest down at these lows. You know, stop position is everything in futures. It really is. But like everything, you know, if you're going to do a liquidity run, the further you push people, the more you're going to get stop out, more orders you're going to munch. Waiting for it to enter. Yeah, gold. If it breaks down again, I'll take it. Yeah. How the hell you know what you're looking at here? I just explained all of that. Yes, it's futures. This is futures, yeah. Training. It's called training. That's how you know what you're looking at. Right, let me just turn it off. What's that? So yeah, gold. Again, this move, little breakdown today. So we're off, bouncing at the moment off of 38. So anywhere in there for a pullback. So I've got the stop losses on that position there. So I've locked that one in. That's just behind the reversal alert at the moment. So we'll see. But yeah, it'd be a nice little trade this morning, that gold. Be the first time for a while I've actually made money on gold. Mind you, it's the first time for a while I've actually traded gold. So that's good. I've got a $750 loss I've got to make back at New York. And in New York, when the New York Open happens, that if you get Jigsaw and you watch the futures market at the Open, it is like nothing you've seen before. It goes mad. If I went short with 5 contracts at the Open, I could be $2,000 in profit within 2 minutes. It goes absolutely mental. Well, you know it goes mental. It's the same as, you know, here, isn't it? You look at this on the 1 minute chart. Yeah, I mean, it's, you know, normal price action is that sort of candle size. That is what we got in 3 minutes. Yeah. You know, what that trade I just showed you in futures there is equivalent to trading the Asian session in New York because they're shut, they're asleep. So I was trading a pullback with 3 positions like that and I got stopped out there. If I take 5 contracts long or short at the Open and it does that, that's worth $1,500 in one move. So this is why everybody trades the New York session, and they don't like trading Globex, what's called the Globex session, which is when the market's open on the US futures, but obviously New York is closed because they're asleep. It's the Asian session. So Asian session is a lot harder to make money out of. So I don't mind going a few $100 into loss in Asia, because literally you'll have it back in minutes in New York, assuming you get the breakout the right way, obviously, which is key. Right, that's it. I'm done for the morning, I think. So 1.5% this morning, sitting in 4.5 still. Main issue is still Aussie New Zealand, but it's a lot better than it was yesterday. We were like 4%, 5% yesterday, weren't we? So we are still holding up there, but we're ADR. So we've got an ADR hit today. We have, however, thankfully, managed to break that high. So remember I said about this being a potential wick-off move? Yeah. So there's our low. There's our wick-off spring. What we do after a wick-off spring is we move back up to the recent high and accumulate ahead of a break. So if this is wick-off theory playing out as it looks, this is an absolute textbook wick-off happening over 4 or 5 days. That's a normal wick-off move, isn't it? 4 or 5 day accumulation. If this is it, this is our accumulation hold before we break to the upside. So we are 125 ADR today, so I wouldn't expect necessarily to get too much more out of that. We might get 150, but we'll see. And obviously the DAX I'm short on at the moment. But other than that, everything else is just sitting there. So I will bank what I'll bank, and I'll let you know if I bank anything much, but I'll just let the EA just scale in if it goes against, and then we'll wait for tomorrow. So big day tomorrow, CPI. So tomorrow we're back for CPI figures at 130. So this is going to be the big one. The year on year, we've had positives, the vast majority. So if this keeps going, the US is going to still keep going. So we'll see what happens. But I'm headed off to the futures rabbit hole, Seymour. Yeah, good luck. Treat it like a different thing. Treat it like best thing to do. Like treat it like a Formula One car, right? Trading is your everyday driver you go to work in, you make your money out of. Futures is nuts. Futures is another level of complication. And you are trading by the tick. You're in and out within, I'm in and out within a candle making $500. You don't have to be, but that's what most futures traders do. They're in and out within a candle. So, you look at a typical candle on an index, right? That move from there to there. So if I saw a push, let's say I saw a bullish engulfing and I said I'm going to break above that high because I can see a load of limit orders sitting up here or something. That move there is worth anything up to $1,000 in one candle. You could obviously do it in Forex, but it's just a different thing because you have no control over your contract size, apart from the number of contracts you can take, and every contract has a fixed value, which is why I trade micros, because it gives you a little bit more flexibility on what you trade. We're just testing the 50 on the DAX. So if we're going to get a trend day, if that did hold that support, this is where I said we were coming down to, held very nicely. But if we're going to get a trend today and we're going to re-break and go for the lows and go for that gap fill, we're going for the gap fill down there, which we're not going to hit today, obviously, because it's 250 ADR. But if we are going to start to make some progress and go into a trend day, we should be looking for that propulsion gap and roughly ADR ahead of CPI tomorrow. Fingers crossed. So this is where you want to be getting in if you think we're trending today. wait for some bearish price action. Obviously, we've had nothing but bull candles. So, and if you are in the futures market, you would see there's nothing but buyers at the minute. But like I said, you're very, very careful of rotation today. You know, we could well easily be in a holding pattern. I think that's more likely that we're in a holding pattern, to be honest, today. So probably sideways. But if you're going down the futures rabbit hole, good luck. I'll see you next year. Becomes addictive. It's very much like a game playing futures. Very much. It's very easy to get addicted, because it's very cool making that much money that quick, but it's also very easy to lose it just as fast. So be warned. Start small, stay small if you can. Right, I'm off, guys. I'll see you tomorrow, same time, 7:50. As I say, don't expect too much today. There's no news. There's nothing happening. So yeah, we'll wait for tomorrow for CPI. Anything that I'm getting out of, I'll post in the group, especially this gold. Oh, God. But other than that, I think I'm just going to manage this lot. I'm not looking to get into anything new. And yeah, see if I can get some more in the bank today, which would be lovely. Get rid of some of this drawdown, but we'll see what happens. All right, so any questions you got, come in the Telegram group. I'll be in there all day. But other than that, I will see you tomorrow morning, 7:50, and have a good day.